Scooby-doo-ba-doo-ba-dee-lee-dop. Skibidi-bop-a-dee-da-ba-soo. Mama-dee-mama-doo-boo. Skibidi mama-dee-dee. Boo-ba-dee-la-boom, ba-ding-ding-diddle-doo. Ba-ba-doom-boom-boom-boom-ba-dee-ding. Ba-ba-dee-ba-dum-bong-boom-ba-doom. Boo-ba-doo-doo-doo. Ba-da-ba-doo-doom. Ba-doo-ba-doo-ba-doom-ba-doom-ba-doom. Let's do-do-do. Do-do-do-do. Do-do-do. Do-do-do-do. Wop-ba-ba-da-boom, ba-doo-ba-da-ba-ba-doo-ba-da-ba-doo-ba-doo-ba-doom. Hip-da-tick-tick-a-ba-da-ba-da-boo. Ha! How's Jamaica today? This is Mark Lovato. Good? I don't know. It looks fine. It pretty much did what it was expected here. I think it made a lower low, which is kind of a bummer, but it was 28.35. Yeah, I mean, it technically made a lower low, so could be a 1, 2, 3, 4, 5, or it could be that this is just the beginning of another move down. When you got that weakness, it can happen. I will say, though, that at least on the 30-minute, you can see there's an RSI divergence. Those things tend to play pretty well. They're not perfect. But if it can make a bottom here and there's a divergence, then it's stronger. Yeah, I got it taken care of. My kiddo had his Christmas party today. He's only got a half day of school. My wife took off half a day. She wanted to go hang out with him. I didn't really want to go. End of story there. But he was like giving her a hard time this morning. She was getting upset with him because he's like, I don't want to go to the party. And I was like, all right, he's not a teenager, he's like a kid, but he's got a little attitude. And they're getting out the door, and he missed his bus because he was humming and hollering. And so I'm like, all right, I guess I'm up, because it was early. It's like 6 or whatever. And I was like, all right, I guess I'm going to get up. And by the time I got out there, the bus had just come by, and he had missed it because he ran back home to go to the bathroom or something. My wife's all upset, and she's like, he won't go. He's like talking about how he doesn't want to go. I'm like, he can't not go to school. And she's like, I know, but she's frustrated. She's like, but he just missed his bus, so I'm going to take him. And then she's supposed to show up at 9, right, which is now, our time for this Christmas party. And they go outside, and then she's comes back in, storming in, because she's just flustered at this point. She's upset. And I was like, what's going on? And she's like, the tire's flat. And I was like, well, these things happen because when the weather gets cold suddenly, you think you don't have a flat, and then the pressure drops, and then all of a sudden, air's gone. And sure enough, there was a pretty decent puncture in it. I mean, it was a object. You probably could have gotten it patched, but the tire wasn't in great shape anyways. So I was like, well, I'll just keep moving forward. I was like, I could take you in the truck. And she's like, you won't make it there. The truck will break down. I was like, all right, well, we're obviously just going to need to take a break for a bit because my son was running a ragged, dude. And I'm like, this is your community right now, kiddo. You don't have you have a couple other places, he goes to church and stuff, but in his taekwondo stuff. But he doesn't like school very much. I think he's just bored, and he doesn't doesn't enjoy it very much. So it's always pulling teeth. But I'm like, dude, it's your last day. It's a half day. It's a fun day. We're not going to be truant on your last day just because you had a grumpy morning. Your mom's upset, but a lot of that's just because of this tire. I was like, so I'm going to go fix the tire. So I went out there, and it was cold. I'm sniffly now, but it was cold, and I put the spare on, and then I waited for the guys to open, and thankfully they were really good. The one place I usually go to, they're just not open. They're never open when they're supposed to be open. So I stopped by there and I was like, no, I think I'm done with this place. There's another place literally like 300 feet away. And I was like, I'm just going to go there. And it turns out they're cheaper anyways. So in the end, it's actually a good thing because we're planning on visiting family, and I don't want to have to deal with flat tires on that trip. So I'm kind of grateful that it happened before. Could have been worse. So I'm happy. I'm like, whatever. I'm not happy to pay for a new tire, but whatever. It is what it is. Like I said, I could have got it patched, but the tire was pretty busted up anyways. It was like worn on the sides. And I was like, no, let's just fix it. So yeah, I mean, I think it was more frustrating because the drama of missing a bus and having a kid that doesn't want to go to school on the last day. I'm like, dude, it's not really an option. Like, you can't just choose to not go. I worked for a short time at this place earlier in the year, and one of the biggest problems that they had was that they would hire people, and then the people just wouldn't show up. They just wouldn't show up. I don't know what it is, if that's not something that people are correcting when kids are young, but like sometimes you just have obligations, and you just got to do it. And I don't get the idea of like, oh, I just don't feel like it, so I'm not going to show up. Like, if you don't do that at work, you're going to get fired, and rightfully so. Because you can't just dip out and not show up. I mean, it sucks that you're kind of bound to that, but that's just life. You're a slave to something. So I feel like it starts when you're real young with school, because there's definitely times I remember growing up thinking like, I don't want to go to school today, and you try to fake being sick or whatever. But really, like, it's not really a healthy attitude in the end. There's going to be a lot of times where you don't feel like doing something and you still need to do it. So, a lot of times. That's like all it is to be an adult, is like learning how to do things that you don't really want to do. I thought you guys like, that's not all there is, Booksy. Somebody didn't tell you something. No, I know, but that is a lot of what it is to be an adult, right? Is just doing a bunch of stuff that you don't really want to do, but that you need to do. Anyways, so it was a drama-filled morning. I was all over the place this morning. Thankfully, I got a beanie for my birthday this year, so I was like, I'm super excited to test this sucker out. So put my little hat on, like a little Kevin McAllister hat looking thing. Went out in the cold and fixed the tire. So it's what it is. And the funny thing about it is, like, all the things that, were going on this morning, and I'm usually not the happiest camper in the morning. I was probably the most relaxed, and I had to do the most crappy job out of everyone this morning. Like, hey kid, you're not going out and fixing a tire in, below 30 weather. Like, just be grateful that you're just going to a Christmas party, Whoa. It's so horrible. It's just silly. But I get it, man. It's like everything's about comfort for people. So if you're not comfortable doing something, it doesn't matter what it is. But I have a great, great love for my son. But I also think that, kids need to be brought up. And they need to be told when it's good or bad. So he doesn't get away with everything. So his attitude wasn't good. I'm looking at AMC and GME today, and I kind of was thinking like, all right, so we're going to have one more day of the week, and it's probably going to be kind of boring. It's a Friday. My expectations are sort of low. I know that in my head, there's a possibility that we're moving somewhere next week. I mean, it's going to be highly, highly probable that this will move significantly next week. The reason that I say that, and you might say like, well, it could just like bounce and come back down and be again at 415 by the following Friday. Well, yes, but when I say significant, I mean that it has to make a move somewhere. Now, there's been times where I've said that and people will disagree. They'll be like, it doesn't have to do anything, Booksy. And what I mean when I say stuff like that is that you're kind of coming to the end of a rope, right? And you have to sort of either make a leap above this creek or you're going to drop it, because you're not just going to technically, I guess you could just like slide through it and do nothing, but that's pretty rare. Every time we've jumped a creek on AMC, even if it's like mild, we've made a move. So like, it doesn't matter if it's a mild move or it's like a massive move. All of these bigger moves that you see to the upside, every single one of them is tied to a creek jump. And then likewise, if it doesn't jump the creek, it's tied to downside. So there's really no instance at all where, even if it doesn't ultimately, maybe a week later, maybe it's back to where it is, there's still no instance where that Monday is likely going to be just kind of flat. That's not really likely in my mind. So today, if we don't move, it's really just a setup day. And then Monday, the 23rd, and then the 24th, which is Christmas Eve, those will be 2 days that you're probably going to have some decent volatility. Even if it's not like the highest volume because of the holiday, I think you're still going to have decent volatility. So, KMK, we're basically like similar in age. So, yeah, I'm updating AMC. I'm just talking. When people come in the morning, it's like it start with like 10 people, and then slowly it builds up to like 50. It makes sense for me to just kind of ease into just share a little story about the morning. Just ease into the morning with a simple story. This is not a podcast. Like, I'm not going to just sit here and talk about myself or about topics of the day or whatever all day. I'm going to talk about the chart. It's just that when we first get started, it makes sense to just kind of ease in, let people show up. That way I'm not repeating myself over and over. So we are talking about AMC right now. And I do think that it's a Friday. I don't think the expectations need to be high. Have we had really explosive Fridays in the past? I would say yeah, but not that many. There's only I feel like there's only a couple that stand out in my mind, and that says a lot because that's over 3 years. Like, I feel like I've only really experienced a few really good Fridays, like where they're just really green or something, or just super positive. Most of the time, you're already kind of at wherever you're going to go by Friday, and the primary action, as most people are aware, is just kind of pinning or gently moving to max pain or something like that. Being that we're at 4, we're pretty low. If max pain is 4, maybe we'll stay low. If it's 450, I'd be surprised. 450 would be like a breakout for us, so I'd be kind of surprised if we went there. 4 is pretty low, but it is within this current little range that we're in, so it's definitely not out of the question that it's like 399 or 4, because that would make sense since you're within the range. If I had to venture a guess, I would just say, again, pretty flat, unless we see some kind of early break move here. I'm going back to 2020. I want to see what happened on this bottom real quick. This is a pretty classic, like, ascending accumulation right here, like a push out. Then it backed way up to the creek here. I want to see the days. That's why I'm kind of looking at it right now. So this was a Friday the 15th. And then it looks like there wasn't a Monday trading session. Maybe that was Martin Luther King Day. Is that in January? I think that's in February. What is in January on the 18th? I don't know. There's some holiday. I don't remember. Yeah, it'll come to me. Well, so like there was a Friday move here. This actually did break out Friday, and then come Tuesday, this was a 3-day weekend. It broke out, went pretty far. So arguably, if we're using like holiday kind of metrics there, that 3-day weekend could have been potential catalyst element. But that was a decent Friday. This Friday back here didn't break out. It looks like it didn't really move until Monday. So it just kind of sat there. This was January 8th. Monday, yeah, nothing really. This is a Thursday to Monday. This is the New Year holiday. So it was off Friday. Again, you know, Mondays are just typically higher volume, bigger push days. Wednesday was a big day for us here in January. Monday, this is another kind of bigger move on a Wednesday. Really, it's like a rotation. It looks like Wednesday to Wednesday here. So there's an element of two things going forward back on this. When it hits a spring and then it comes down and it holds it, there's two different elements of thought. One would be that this is like an extending accumulation because it's rising. This is the same way you see it in March. It's rising in kind of like a parabolic motion, right? And until it doesn't. And then you have a breakdown with like cat ears. And then there's a backup to the creek. And this is all the while this is happening, it's approaching like a more massive creek body. So at this time, I'm not really positive where this was. I would have put it maybe here on this cat ear at the end. But it's hard to say how I would have done it, you know what I mean? That was like in the past. Maybe I would have done this, but this to me looks like the middle of the M cross. 1, 2, 3, 4, and then it jumped over and held. So it's a little bit of both. It seems like there's a bit of a triangulation, and then I would say this is probably where this stopped here. So there's a bit of a triangulation here of waves and wave crosses, meaning like it was kind of pinching into a corner, right? But at the end of the day, like we know that the buy-in didn't really start until the spring, and then it wasn't super obvious until it hits that Tuesday move. Then it was actually out. So there's still, well, excuse me, this is Friday. This is a Friday move. There's still a chance. I mean, you never know. You could have a Friday move that is pretty dramatic and then kind of set up into the last week of December like a breakout. This is ultimately where it jumps like the bigger creek up here. So this didn't happen until like a week later. So that's one train of thought, is kind of like that rising accumulation model. I call it that because it looks like an inverted beak where it's like narrowing, but it's doing it parabolically. You're getting push-ups, but they're not breaking the creeks. So it's like there's a buy-in every day. Almost looks distributive as a result, but then there's no creek crosses. Like it's pretty strong. You can see what I mean when you look at this like here till the last one, and then it drops down to a lower creek, like to retest the floor that it dropped off of at, well, now it says it's 1181 or whatever. But anyways, so if we were to expect something like that, this is a week-long rotation as well. And what I mean by that is that if you look at the Wednesday to Wednesday, it is a rotational symmetry. I don't know if that's necessarily the best way to put it, because I think every M shape that we draw probably could be made to look like that. And I don't necessarily think it's the best way to sort of frame it, but it is there. I mean, it's a way to look at it. So in this case, you might have looked at it like a rotation here. You could draw like an X if you want. Back down to this particular creek cross, and this is ultimately like the one that it is tested, and you can see it dips below it and then it pulls back out above it and then it's going. So I mean, there's different ways of looking at the same information. For a wave, I would just look at it like an M, and ultimately it took about a week to kind of work its way back out of a spring, and it took about another week to really kind of get to the next break, which is the bigger break. Now for us, we've talked about this, it's really high. If there was a chance it was going to run, and it's not impossible, okay? There's a decent argument to be made at this point, and I've made it. It would have to be, and maybe even a better way to do this would be to use these wicks right here. It'd have to be later, like it's up high. It's really far up. So there's an element of maybe continuity that doesn't really follow here. Like you can't really make the same assumptions because there's no comparison with where we are now in this regard. We'd have to go all the way up to basically an SOS. So it'd be really fast. So this move, potentially, these two moves, I think on our current time frame, and this is very fast, but I think on our current time frame, I think these two moves would probably be pretty rapid. And I think we talked about this yesterday. We did the 50-50 stuff where we looked at those levels. And it's not on this chart. I think it's on the other one. Yeah, and the 50-50s are very, very nice. Like they're super concise. It would be a push and touch on 438, push and touch on 484, push and touch on 586, roughly. You know, it could kind of melt through those and back and forth. So that particular move itself, I think, probably goes pretty rapidly. It may be the slower part of the move. And then the markup itself, again, the next 50-50 is up at 870s. And then the final one is, I mean, there's a couple, but the final one is way up here at like 19, right? So it's a fascinating build out because those are the levels that we've already built. And they're already established to give you like basically S-curves that build upon S-curves. We'll see, you know. We could break it down more, but the truth is if this is a spring and it's heavy, heavy volume here, it's very possible. First step is just going to have to be getting back above, in my opinion, like the 440s. So we're not there yet. And that's why I'm saying, like, I don't necessarily think it's impossible, but I wouldn't exactly count on it being very exciting today. There's not really much need for it. There's plenty of space here. You can drop it or bring it up again and wiggle around a bit till Monday. Monday on my chart, my little indicator right here. I'll show you where it is right here. So there's quite a bit of time. I have it, looks like I have it going up into Monday, like a breakout today going up to like 460. It's not impossible. I mean, it could go up here and then drop to like 450. That would be really strong. If we see something like that, maybe this afternoon, I'm not positive, or I wouldn't be overly confident that we see something like that this morning right away, but maybe we get like a late, well, yeah, maybe we get a late move today around noon or something. So yesterday what I was looking at was, this is already done. Yesterday what I was looking at was coming down back to the floor and then bouncing out and starting to cross that creek. We're doing that. It's a little tricky because right where we're at right now, man, look at that volume right there on that bottom. That's kind of great because then like the next move down is like really low. This looks like a pretty classic AMC setup. I don't use the master fractal stuff as much as I used to, but it's very much still alive. Like that idea of those W bottoms does kind of work out sometimes. Kind of did one back here too. Heavy volume, push down, build out, break up. Heavy volume, push down, go down further. It makes a higher low here. It's not impossible. I think what we would want to look for is ultimately like a break above 415, which is kind of a given anyways. That we know that's a key level. So let's just pull this down to 415. I think a break above 415 and you're likely running. You might even make that jump all the way up to, in which case this will look really accurate, but my expectations are kind of low is what I'm trying to say. And I don't really think that matters that much. If it didn't go and it just kind of comes down again, whatever, we wait till Monday anyways. GME is kind of the same way. It's in a position right now where when we talked about this yesterday, it looks like pretty perfect. I had said that when I thought it would come down, I thought it would come down to here. So I actually had this line a little lower because I thought I was going to hit this lower midline and do it just enough to fill that gap. It did make a lower low, which is significant. It did so with an RSI bullish divergence on the 30-minute. Not sure if that's there on the hourly. But that kind of thing right here is good. So what I mean to say is, like, when you come back down and you don't pass through the middle, if you can push off of that, notice that like the last couple times we kind of moved through it. We didn't really hold it, and then we kind of passed through it. We passed through it like several times. The last time it really held was when it was a resistance up here. So when we talk about things like rotations or whatever, we're really talking about the potential of that being a support while it used to be a supply, right? So the flipping of the support to supply is really significant, or supply to support, excuse me. That doesn't mean it's over and that you can just say, oh, it's going to go. Realistically, is that enough? Yeah, I would say it is. But at the same time, it made a lower low. That could indicate that there's a desire to try to take it down again, you know, on the part of sellers. So at this point, what I would suggest is that we need to see a support. Pretty simple, because it jumped this other creek, which I kind of threw this up here yesterday. We didn't really mess with it too much while I was actually doing the stream, but it did come back and check it right here, like end of day, and then dropped. It's broken out. So I would expect there to be some kind of a support built here, maybe around 29 even, pretty close to that. And then after that, same deal. Just like AMC, if it's going to go today at all, maybe like a midday run above the creek here, which it's not even like it exists right now. It kind of looks like it doesn't exist. Kind of looks like this is the only creek and we don't have another one. But these parallels are usually very indicative of like a stopping point later. So like my imagination would say that this is probable that this lines up with a creek cross according to the levels that are already there. So like we already have evidence that we need to get above 29.90, for example, or 30.15, that little pocket region right here, which was resistance. That would make sense then, right? If it correlated with what we see as a breakout here, that would be maybe a position where we need to sort of stop. I would be happier, I guess, if it did that first and then advanced above the top here at 30.60. That just typically is a better way to do it. It's stronger. If it like pushes against this, finds support, then breaks it, I don't have any worries about it coming back down. If on the other hand, you go up too high and you go above the top here, then you have to be really concerned about a major drop. And especially if it doesn't check it, just like last time right here when we jumped this creek, you can't just like leave stuff like that untested. The market doesn't like it. You know, demand wants to get the buy-in and supply wants to test that support. It wants to see if it can break back through it. There's just no reason to jump over a major creek and then not check it, you know, unless it's like a breakaway gap or something like that where it's a huge amount of volume. You really should expect it to go back. So this would be a similar situation if it pushes up high. Aside from that, I'm not really concerned about the price action on GME either. I think it could kind of chill out all day down here between like 28.30 and 29.50, and you wouldn't have a whole lot to talk about, but at least, you know, it would be kind of steady as it goes. You wouldn't have to worry about any kind of craziness here. So, yeah, you're asking me about the accumulation distribution indicator, which I have used before. I'm not a huge fan of it. I'll have to refresh if we're going to look at it, but happy to do it. My understanding is it's kind of like if I remember right, it kind of reminds me of like a MACD indicator or something. It's supposed to give a sense of strength and direction with buy-in, but I'd have to check again and see what the what the parameters are and all that jazz. Let's do it on the daily if you want to do it. I used to have it starred. I guess I still do. I have one right here. So I got two different ones. I have an accumulation distribution line. So this must be the one that comes generic with trading view. The other one was coded by somebody. Right. So the concept here is fairly straightforward. Like if it's trending down, then there's distribution going on. And if it's trending up, then there's usually accumulation going on. But you have to have a concept of like what that actually is. So hold on just a second. What I mean is that like you have to know what. So I'm gonna go over here. Yeah, this doesn't really say much. Usually it's in the, I don't want to look at the source code. There's a description in TradingView. I might have to look it up through there. This indicator was developed by Mark Chalkin. Yeah, that's what I said. Because it's like there's a Chalkin money flow indicator as well. I felt like it was somehow related. It might be a different one, but I think it's the same guy. This doesn't show you anything. So this one's not really showing me that trend. Maybe we'll use this one instead because I like it better. Anyways, it's probably why I have it starred. It's been a long time since I used it. I'm trying to like refresh my brain. It's pretty much the same, but this has like a moving average essentially. Right. So it's just showing you like buying versus selling. Let me look at the formula for it. Blah, blah, blah. It gauges supply and demand of an asset by looking at where the price closed within the period's range, then multiplying that by the volume. The AD indicator is cumulative, meaning one period's value is added or subtracted from the last. That's important to note. In general, an AD line helps confirm a raising price trend, while a falling AD line confirms a price downtrend. Okay. So the formula is your close minus the low, and then subtracted by the high minus the close, and then divided by the high minus the low. Money flow multiplier, closing price, low price, high price, money flow volume times the period. So it's complicated. So it is, yeah, I was right. It does use the money flow indicator because you'd have to have the money flow multiplier in order to use it. Which has to do with the period's close, and then the high, and then the low. So it's pretty straightforward. I think it's just a confirming trend, you know. I'm not really sure what the expectation is on this. Like, what would be the expectation for this that you would expect it to be green right now, I guess. I mean, it'd be nice if it were divergent from the trend, but what concerns me is that from the 21st sneeze, it just went down. It wasn't positive since January 21. Right. Well, that's because this whole thing last 3 years has been a downtrend. I mean, there's no like silver lining to that. This might be a little confusing. I think you'd have to consider like the shift as well. But Yeah. I mean, it's a cumulative thing though. So that's the complicated nature of this. You know, the idea of cumulative being that it's not dependent on just a small period of time. It's dependent on like all time. So as it goes down, like now that it's down here, it's not calculating, you know what I mean? Like it's calculating from this point. So it's using these values at this point. Does that make sense? Yeah, that's July. But we already knew this was in a quasi distribution anyways. Like we already knew that. There's nothing particularly new under the sun here. Like, so what I'm trying to say is that these momentum shifts right here are significant. You can see why. But this was designed to, in a lot of ways, to induce a sell-off. I heard somebody say to me once that they were like, oh, this whole thing was an accumulation. And I'm like, no, not really. This would be designed, this giant pump with this huge amount of volume and a pump down, like it's a huge double flight. I mean, it pushes all the way up in order to sell all the way back down. That's clearly like a distribution underneath 6. Like the idea was you're going back up, maybe you're covering positions and re-entering or whatever. That's not even in question for me. We've talked about this before. But you have to remember like the cumulative nature of this means that it doesn't just reset at any point. That's not possible. So it's going to continue to roll with the same numbers indefinitely. I'm not seeing any reason why that would be alarming. I think you could look at periods of time and it can help you determine what really happened. There was a huge amount of selling here, right? It's in relationship to what's gone on before. This is the buy-in. But we already kind of knew that, you know. This area that you're talking about right here, this is in July, the first 2 weeks of July, basically. It's really this top right here. It's not the Roaring Kitty tweet is back here in June. I made a case that was what it was used for. So we've already talked about this because like I said, when it happened, I said they just used it to distribute, which is kind of obvious because you can tell what happened. But they use that pump to then dump it back down, which is what happened. So it's essentially just a marker that's an upthrust in the middle of this kind of distributive model. I think what would be more important here is that your distribution hasn't yielded at this point. Like this has been the most dominant form of it right here, this drop from the peak. You had a clear amount, like heavy distribution coming down. But it hasn't really yielded, like from that point forward, this distribution has been steady. You know, I think there's a danger in maybe overthinking this and saying like, well, if they're distributing, then eventually they're going to dump it again. Maybe, or maybe they're just trying to get a lot of people to sell off. You know, we know that there's a lot of institutions that own stuff here. And if the goal is just to get people to sell off, then it's working. And how many people have you heard complain about the last 5 months? A lot of people. They think the stock is dead, right? To me, this looks like what we call like the shallow S-curve, where it's come down into a gully, and now it's making like a long-term M-cross here. You know, and it potentially could drop. That's not like out of the question. We've already been mentioning that frequently. You know, this could be like a massive S-curve, but if it's not, then this is a period of turnaround. And a lot of times what we see is that initial drop ends up being the buy-in, right? So that initial drop, buy-in, right? It's essentially like the same exact thing that happened here to some degree, except notice that the price is not tanking. I would take some amount of comfort in that personally, because you're not, the idea of looking at this and saying like, oh, the stock is completely ruined, That doesn't really make sense because, again, it's cumulative. So it's not going to ever like go back to how it was immediately. That's just not going to happen. It's going to just continue to multiply on itself. But this being like another distributive action, I think is a very positive thing because it's not breaking down. You're still trying to sell it down in much the same way. It's very similar. And then this ended in that kind of conversion over after this last drop to buy back up and break out. We're really talking about the same thing here if it does go to the upside. So it's just another chance for them to try to get people out of the stock. I don't really see it as anything else. Anyways, you know, these indicators are good and all, but they're kind of baked into them, like the same kind of misleading nature at times to other things. Like they may be very obvious, some of them, and then some of them are just going to look like really, really bad right before they're good because they're not really interested in giving you the answer. I wouldn't look at this and just based on this comparison, like this downward motion here is kind of similar and this hasn't really moved. So it feels like a really flat distribution effort. Wouldn't it suggest that this specific stock's been shorted heavily or oversold? Yeah, but you already knew that. There's not that many people who are so disillusioned that they think that the shorts didn't get out or that they were not unable to get out of AMC. They just re-entered and then they shorted it down 1,000% plus, right? So for me, it's not even really like a complicated question. All you have to do is look at the price action. The price doesn't just move. People think, they always say like the price is fake and all this stuff. I don't know where that comes from. You can't move a chart down unless there's active selling. I don't care if you're covering shorts or carefully covering them or whatever. When you walk it down like that, like there's definitely selling going on. There's definitely selling. You can't say there's not. You could argue that the buying is being like manipulated or this or that, but there's selling. What I would urge you guys to look at, instead of like just looking at this and saying like, well, we're screwed, which I get it. I get why you would think that. This is a hot mess. But instead of looking at that didn't happen. But instead of looking at this, well, we knew that didn't happen. That was the 460. What I'm going to do is turn off. Yeah, I guess I could just hit the little button instead, since I don't need to draw any more lines here. I would instead compare it to what happened the last time we were in a big gully on a wave, which was in 2020. So I would go back and examine 2020 instead of compare it to itself. Instead of looking at just, oh, the line that's super red that's dropping. Like, well, yeah, it is, but no, I'm not sure if I even have it on here right now. So I don't know if there should be any surprise that the stock is heavily shorted or whatever. This was the highest yielder in 2023 of all the market. That should tell you something. Of the entire market, this yielded the most return for lending out shares. So they clearly made a huge amount of money, and they couldn't have made that money unless they lent out a ton of shares. They lent out a ton of shares to make it available to people who wanted to short or to other institutions that wanted to short, right? So it makes sense to me that like, yeah, it was heavily shorted and they continually bought shares and then lent them out to enable that. The question isn't really, did that happen? The question is, will it eventually turn back around? If I have a controlling interest in the the shares, then eventually I might be able to turn it back around pretty easily. So again, you got to take it back into context of like what was going on before 2000 and what was going on in 2020, which again is the same kind of idea. They were dumping shares into the market to short so that people could sell short. And this is where a lot of people don't like Booksy TA, because I've argued at times that this was pretty intentional. I think that there was a design here intended to get a certain result, and that result was a massive push back to the upside. I don't know if the push itself was maybe they didn't intend it to be as large as it was. That's a different question. But yeah, I mean, it's there. So anywho, let's talk about what we're seeing right now and like what that looks like, what that looked like in 2020. There's some similarities, there's some differences. Let's get rid of, I'm going to go to like the split, because I don't think it's wise to look at anything else. And I'm going to expand this out, because I think the split values complicates these indicators too much. I don't think that's a good idea. Okay, so I'm not here to make a bull case necessarily, but I think we've looked at this enough that it probably will yield like a fairly bullish result. So I just want you to know that. It's not like my intention to be like super bullish and say, oh, it's gonna run and blah 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 blah. But we've looked at this before, and it's definitely very similar in some respects. So we have essentially like a push up right here before a massive drop, push up before a massive drop. I'm looking at specifically like RSI right now. I talked about this sell down, which is just like an M cross down. So essentially like an S curve down. You get the same M cross down here that leads to March 2020. You get a big buy-in. It's different. It looks a little different here, but essentially this is just a cat ear breakdown, and this is just a cat ear breakdown. When you get to 2020, meaning like this is a top trying to distribute low, this is a top trying to distribute low. They both come back down and check, RSI again. When you get to 2020, the end of 2020 rather, you see that there's a buy-in. It comes back towards the middle. It doesn't break out, but it does have a really high rise. And then when it comes back down, RSI is now divergent, makes a lower low. It does so on heavy selling volume, okay? And at that point, you're basically looking at this like at the mercy of, again, the operators, like as a do or die kind of moment, because essentially at this point, this could have broken down and just gone to a new range. This could just break down and mark down into a new range. When I look at this, I personally think the similarities are kind of uncanny. I definitely could see why someone would look at that and say, well, you just see what you want to see. So I get it. One of the things that really strikes me here is that this rise happened. I'm going to unhide. No, let's just hide it again. This rise began on OBV, which is on balance volume, after that initial reaction from the bottom. So after March 2020, before that point, unbalanced volume had been dropping significantly, steadily over time. And then in 2020, when it hit that low, it picks up. It doesn't change direction again until when? The end of 2020. Like the end of this range is the only time where you see like the OBV really drop. Otherwise, it's rising all the way through even the December top in 2020. You see the exact same thing here. I mean, you can argue that it's not the same, but it's the same. Like there's no, and even here, like it didn't even drop that much. That's my only real major concern right now, is that it's risen. It's just not, it dropped, but it didn't drop very much at all, right? There's other ways we could look at this. I'm not going to doodle on here because I turned off my lines, but like there's other ways you could look at it and try to like figure out if this is like a creek jump, and it jumps over the creek here. You could look at this and say, is it a creek jump? Maybe it jumped over something over here. Maybe. I don't think that matters as much as the primary goal here, which would be to, again, kind of at the end of the range, instigate a sell-off into a spring. Those are only ever effective if you get a lot of sellers. So in this particular instance, there's a stark contrast between what's going on with the strength index and what's going on with OBV, which is, again, OBV is actually losing, on balance volume is losing. And then notice that is really reflected here in that accumulation distribution indicator. Now, this is where maybe it gets a little tough because at least on my screen, this looks kind of hard to see. But I want to kind of close off. So I'm going to close off the on balance for a second. Even though I think it's important, I'm going to close it off so we have a little more screen space here. I'm going to keep the RSI up because, again, that divergence is pretty significant. And what we're going to do is just look at what happened here in that buy up. Arguably, if we're talking about similarities, we would say that August 20th, 2020 would be kind of similar to where we were in July. It's another attempt to try to run the stock up. It's the only time this comes green. I've felt like that for a little while anyways, that it was kind of in this area. This is like the second cat ear, if you will. These guys all are part of, even though this is like one massive push, these guys are all kind of part of the same group, because to me, like, yeah, this is all one motion and distribution. And so there is a similar motion here, though it may be a little tricky to see. If you notice, starting in March, there's a green area right here. It doesn't look like a lot. You're like, well, that doesn't look great. No, it doesn't have this like massive buy-in. But notice this is going like completely the opposite, at least on this indicator. It's going completely the opposite of RSI, of price action. It's already dropping like extremely low. This is dropping you to a completely new level. It goes from -14 to -26, which means that as this was going up, people were selling, institutions were selling, right? They're probably just covering short positions and then re-entering or selling, you know, stuff they bought like on that little burp at the bottom. I mean, you can do a lot of different things in the market, right? But you can see why that's a big problem, because this is dropping rapidly to a new level while this is going up. That's very similar to what we see here. It's dropping rapidly to a new level as we think this is kind of rising still with an attempt to go to the upside. It's still dropping. So the roaring kitty stuff happens during that downtrend. And then you get a buyback in at the bottom. When it kind of bottoms out, you buy back in. I would say that's similar to what happened over here going into September. It's not exactly the same. We've looked at this comparison a number of times. There's definitely ways of looking at this that don't really add up. You know, they're not really one-to-one. But this is the cat ear. You know, I talked about this before. Like, it's a confusing diagram because it makes it look like, and I do talk about it this way because there's a wave here in between the two. So this looks like a double up thrust. So this must be the cat ear. But that's not really true. The cat ear is over here, like this whole area. So this is where things get kind of interesting for me, because I'm like, well, we know that there was a wave here, and there is a cat ear, like a 1-2, that crosses that wave in the middle. We know that's true. The middle being around July. We've talked about that extensively. But if I were to draw this out, and I've done it before, the ear itself is here. Like, this is 1, and then this all is part of 2. Like, I use the term cat ears to refer to a wave, and it's overlapping itself, right? So like every wave has within itself another wave that is the same structurally. So like this has the same structure within this wave, this second ear. And that's important to note, because when you start looking at it that way, it just like expands out the picture. It's complicated. This is why I don't do this kind of stuff with the fractal junk, because a lot of times it gets a little too confusing. But it's easy to see here. You can see the push up and then the drop and then the quote unquote second cat ear, right? Again, all of this being part of the actual second cat ear. There's a cat ear within a cat ear. That's the nature of iteration, right? On this drop. This would be what we would call like the hook. If we were seeing this in price action, we would be thinking like this is a wave up and then this is going back to check. Just like here, this is a wave up and this is going back to check. This is a wave here and it's going back to check. Over and over and over again, indefinitely, potentially, I suppose. But that's the nature of this algorithm. It's not about A, B, C, D, E, F, G, H, I, J, K, L, M, N, O, P. It's really just like a 1, 2, 3, 4, 1, 2, 3, 4, 1, 2, 3, 4. It's really straightforward. So every time you reapproach it, after that first push-up, I'm usually calling it like part of a second cat ear because it's essentially just iterating and iterating and iterating, blah, 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 okay? So when I look at this from that point of view, and I just look at now the current area, and I don't include that massive first push, what was the primary objective here? And you can answer the question, I don't have to answer it for you, but what do you think the primary objective was? I think at the time, most people would look at this, most retail would look at this and say the objective was to sell it to death. But there's some really interesting stuff going on here that stands in strong contrast to that because it's creating a Wyckoffean and spring range bottom. It just is. Like, that's the only way to interpret that range if you look back. It's also got a divergent RSI. So what's the real story here? Why is there a mass, and there's a hike in on-balance volume, a final hike in on-balance volume here, which is interesting. This is where the on-balance volume peaks. Not up at the top, but in this second move here before a final sell down. What's the real goal? I think you guys already know the answer. I don't think I have to give you the answer and spoon feed it to you. The real answer is that the real goal here would be to do what? Weak hands to strong hands, right? Like they call them weak hands because people let go, right? They think it's going down. They think it's dying. So they sell their shares because they're afraid of it turning back around. Sometimes this is the complicated nature of the market. This is the complicated nature of TA. This is the complicated nature of trying to be prescriptive about things and try to foretell what's actually happening and blah, 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 blah. Sometimes you're wrong and it's actually just selling off. You know what I mean? Like sometimes it's already in a distribution. People are thinking it's a spring. It's not a spring. But if it's in the right place, and it's got the right markers to it, it could very well be a spring action. And that's the argument that we've been making lately is like, well, yeah, it looks really distributive because it did. It did distribute. Just like it did distribute here in 2020 in December. Nobody's arguing that. This little top here, I hope you guys are aware, like on a smaller level, this is like a wave top, right? It did have a distribution at the top here in order to drive the price low. This did have a distribution at the top here in order to drive the price low. It drove the price beneath the range. That's only one of two things. It's either an LSPY and it's going to dump, or it's a spring and it's about to go all the way back to the top of the range and flip the script. That's it. You do not break the range willy-nilly for no reason. The same thing applied back here. This is the only time since March of 2020, dipping into January of 2021, the only time the range is broken on the bottom is right here. That's it. And the same thing applies for us right now. It's the only time the range has really been broken, ultimately, is like right now. Arguably, I would say it tried a little bit below here. There's a argument that can be made about a double spring and blah, 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 blah. I'm not going to go there. I think this is a phase B bottom, but I'm also like, I'm on the same kind of path here. So I'd have to be scrutinized. You could like pick that apart if you wanted to. The point is like this indicator by itself would not have told you that this was a spring. Like by itself, it just makes it look like it's selling off. It just makes it look like it's being shorted to death. By itself, it's not complete. So I would be really cautious about these kinds of things. So like when I look at this now and I'm talking about it now, I'm like, yeah, it's pretty darn similar. This is the point of inflection right here where the OBV peaks out. Both of them have the same markings, right? The OBV peaks right here. I'm going to put a line going up. So this is the peak of OBV. It's also the peak of buying, essentially, since the first buy-in. So then you're looking at this from that vantage point. It's kind of simple in some regard, because it's like, well, this has like been going down ever since then, and this is the only other place it peaks. It's like a final active distribution. It's essentially like a final bull trap, really, if you look at it like that, because it's sort of like the one place where you think it could turn around. It's going up. It looks like it's going to jump the wave. That's what we were saying. Looks like it's going to go. It jumped the creek. Let's go. This jumped the creek too, guys. It did. The creek's right here. It jumped over the creek. This is it. It jumped the creek. Is it going to go over the wave? No, it's not going over the wave. It's got upthrust into it, but it's not jumping it. And then it distributes. And you're like, what the heck? And then everybody's selling off because they see that high volume distribution. And you all are like, yeah, but there was an offering back here. I know there was. I haven't confirmed it, but I'm almost positive there was an offering in December as well. The concept is the same. The idea here is very, 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 very similar. Does that mean that the outcome is necessarily going to be the same? No. I mean, you can hum and haw about it and say that it looks pretty similar and yada, yada, yada. At the end of the day, it does not mean that the outcome has to be the same. It just doesn't. But it would be unwise to look at this and suggest that this is not very, very similar in terms of that setup. And that ultimately this indicator by itself did not do a good job of telling you which direction the price was going to be going. This by itself was kind of incomplete, right? Doesn't really work. That doesn't mean that it can't be used. If you think about it like critically, it makes sense that the last action before takeoff would be a massive attempt to get people out of the stock. Like if they want to mark it up, if they think it has the strength to go, there's always going to be a final sell-off. When we talk about LPS versus spring, a last point of support versus spring, it's what does that yield, right? What does that final sell-off look like? That's the only difference between the two. Both of those final actions in a phase C, as it's called in Wyckoff terminology, both of those final actions are sell-offs. That's really important. It's not the final action before the markup starts isn't a markup. Like it's not up, it's down. Just like the final action before down is up, is to bring the price back to the top of the range to drive the price back down. That's what's really confusing about this right here, is this came so high up. And that is confusing. This is part of the reason why I flip-flopped really quick, because I'm like, well, why did it come so ridiculously high to the top of the range? Could it still be the same setup? That's a tough one. It is. I don't think by design it's meant to be easy. So when I look at this, I don't want to be overly bullish just because the setup looks very similar. If it did not have this RSI divergence, I don't think I would be really mindful as much about the similarities, because the RSI divergence for me is a huge, huge deal, because it indicates to me that there's a really strong comparison to be made beyond just, okay, proportionally there's a lot of similarities and yada, yada, yada. Yeah, but Rocaro, it's not a, that's not a question. Manipulation is a part of the market. You can't have massive entities trading a supply and demand based market without manipulation. It's not possible. You have to think about that and really come to the conclusion on your own that it's not avoidable. The only place that you don't see that, and we've talked about it before, is like penny stocks when there's just no institutional involvement. And frankly, most of the time, even in those, there's heavy shorts. And it's just the Wild West. Like there's no chart to chart most of the time. There's no way you can't buy millions and millions of shares without pushing the market around. It's not possible. It's not possible. That's what the dark pool was supposed to fix, and then people blame the dark pool. And it's like, well, the whole idea behind that was that it wouldn't drastically shift the price around. That was the idea behind the creation of this quote unquote dark pool, right? Where you have behind the scenes trades. It's very convenient for our operators because they can purchase 30 plus million shares while the thing's in a free fall. And you're like, well, how did they get all those shares? Where was that buying at? Good question. You know what I mean? I don't know. They snuck it in there somewhere. There's definitely places where we see a lot of buying. But then you look at something like these indicators and you're like, they're doing a pretty good job of hiding it if they're going to take it up. We don't know that they will, but if they do, it was very well hidden, wasn't it? You can't trade the market if you don't believe that supply and demand isn't relative at all. Like, I understand where people are come from when they say that, but there's no market without supply and demand. The idea of supply and demand has been covered up by a lot of other things. I think that's the problem. I don't think it's that supply and demand doesn't exist. That's silly, because that's like saying the bid and the ask don't exist. They do. The issue is that you have people who make way too much money who can heavily influence that, and now there's a ton of ways, like an onion, right, with layers. There's a ton of ways to kind of cover supply and demand as we kind of see it. That's where the idea of this is not the real price comes from. That supply and demand is being kind of pushed to the side until they're ready, which is kind of true. There is an element of control there where they're playing with all the cards and you only have one and they've got like 51. And you're like, well, I don't know what they're doing, but it doesn't seem like my buying or selling is impacting the way that I think it should. I find it to be a bit of a scapegoat reason, though. Like, the market can't exist without supply and demand. And it's based around the idea that a company that's doing well is going to have greater demand and that's going to cause the price to rise. And there's not really much argument. If you look at the greater picture, there would be you'd have a very difficult time arguing that hasn't proven true. Like companies that have not done well financially go bankrupt and the market drives them down. That doesn't mean it's always just or true. Like that's the idea behind Roaring Kitty's GameStop pitch, was that it wasn't a true. And you know what I say is I look back at that and I'm like, I don't know, man. Like it looks kind of made up to me. Like it looks like a spring now. I don't really know how it was intended to look, but even now I look at it, I'm like, it just looks like a massive distribution into a spring on this grandiose scale. But I suppose like that was the argument anyways, realistically. You can't make that argument unless you think demand has a say-so. And guess what? It did. It made an impact. When demand rose for that stock, it rose like sharply in value. And what you heard from Wall Street is not, oh no, there's too much demand. It was that you shouldn't like this stock, that you shouldn't be buying this stock, that this stock isn't valued here. And the same goes for AMC, you know. I understand where that comes from, but there's no mathematical or logical way to look at the market without supply and demand. You just can't do it. Like, we wouldn't have any frame of reference for where the top is or the bottom is. The position in space that we exist in this little chart is dependent on supply and demand, the concepts of it. So I get where people come from when they say that, because they were talking about manipulation and like how it's often masked and there's not an easy way to see what's really going on. Yes, that's all true, but I don't think that the concepts of supply and demand in the market don't exist. I disagree with that. We can disagree if we need to disagree, but that's where I'm at with it. Because if I take away those ideas, then you can't chart. Like, it's not possible if I don't think they exist. So this right here, this idea of instigating a sell-off in order to get down low and check the bottoms again. And notice, like, this is starting to turn into a very similar final setup as well. I don't know if it's going to pan out, so we can't say for sure it's going to pan out. But in the end, this turned up and it jumped over the moving average right before it took off. We're getting that turn up. I put this on here, turn ups, you know what I mean. I put this on here a little while ago to help visualize that. It hasn't made that yet, right? But in theory, it should be, if it's going to run, if it jumps up here and jumps above 450 or whatever and lands, you might see it jump right above this moving average. And it would be a pretty decent indicator that we may actually be about to go. The RSI comparison, when you look at that compared to this distribution indicator, this AD thing, it's pretty similar right here. If we're just looking at this area, I think it's a challenging one because it's kind of hard to like frame it and get what you need. The comparison is there, but it's not visually. I'm looking at it, I'm like, it's hard to frame this thing, right? Yeah, this is the peaks right above, and then it drops down real low, and these would be your peaks above, and then it drops down really low. This is a lot more rapid fire. If anything, you might be worried, well, what if it's not there yet? What if we're just kind of pushing out and then we're going to dump again and go lower? It's possible, which is why I'm trying to keep the door open for the idea that we may not be at our low. I don't think it's wrong to look at this and say, hey, it could happen right here. It's definitely possible. It's in the right spot. It could happen right here. It just has to get back above like 440 here. But all the same, like, where would we be in the scheme of that? Maybe at this like push right here on January 6th, where it defined that top before it pushed above it. I don't know. That's a tough one. Like right there. And now it's going to build out and push above and come back down. Maybe. But I could see why someone might also look at it and say, no, I think we're really back here and blah, 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 blah. This is why I don't like the you are here kind of stuff. It just drives me up a wall. Because I think that the reality is that you don't have to worry about that. You don't have to like sit there and stare at a fractal. You can just kind of take a simple observation and say, look, this is an S-curve at the end of the day. This could be an S-curve at the end of the day. If it jumps the creek, it jumps the creek. There's a chance based on where this is relative to itself that this has come down to a new low. The fact that the RSI has already made a deviation there. There's a chance and a good chance that this is indeed, it's beneath the range, and this was beneath the range. This is indeed already in the right spot. So if I go back and I look too hard at like fractal business, someone else is going to look at this and say, it's on December 21st. And I'm like, well, sure. I mean, it looks like it could be, and that would be an easy argument to make based on time. Like, oh, it's really on the second green bar, and I'm like, maybe. I don't know. I mean, it's hard to say. They didn't exactly drop at the same point. There's not a perfect continuity. And again, at the end of the day, it's like, I don't really care, because if it jumps the creek, it jumps the creek. I'm going to just assume that that's it. I don't really care where it's at. I'm looking for strength on the bottom here. If we don't have strength, it'll be pretty obvious. And I said this already, but Monday, you're kind of running out of room here. You don't need to overthink it. You know, if you run out of room here, you run out of room. Like, there won't be a jump. It will dump, right? So you have, if you don't jump, you dump. Vote president. Just kidding. No, like, if this doesn't jump over the maybe that 420 area now and it started making an advancement, it's probably going to have some problems. And I think Monday we're going to look at it and say the same thing. If it doesn't jump that area right now, it's going to have some problems because you don't really have anywhere else to go, right? It is possible that this still has like a pump here and then distributes again. We talked about it just a minute ago. Oftentimes you come up back to the top. Again, like every creek cross is an M, and if the M doesn't jump, then it's probably going to dump. Okay, and now I'm having to use this silly slogan. But that will happen here, that will happen here. You know, that technically already happened right here. So this is going to be repeated all over the place. It's better just to say that if you come back above, and I haven't even talked about this, but if you come back above here and you hold above 440, it's decent chance, very decent chance that it's playing out much like we saw in January of 2021, in which case we're about to have a big pop. And it's fascinating to me because when we did that shift value, I have it on the screen. That's the value right here, that 457, which is, we've been talking about 460 for a while. That's the value of the spring from 2021. And that's a really important fact. You're like, what do you mean? Like, that's the place right here that is equivalent value-wise to where this was when it started moving January 15th. It's like right in this area. It's the same spot when you look at the shift percentage, which is fascinating. So it could be that the idea here was to drive it down to the same value and then try again, or basically create what we would call like a double bottom, essentially. It did make lower lows, so there's that. It made a lot of lower lows back here. But this floor, you can see it's been used quite a bit. Right, this floor around 415 and then right up here to 430, both those areas, and I think it's actually at 457 is where the real spring value is, but those are areas that have been set up as a potential bottom. So I'm looking at it like, okay, I mean, it didn't do what I thought it was going to do because it didn't have the phase B right here in the middle. It didn't ever come back up and then drive the price really low, but it did do a 50-50 cross down and then come back and check a wave. Like, it did do that. So it's interesting because it's like, it's all there. It's just that we never had the phase B move, right? And I know that this isn't everybody's favorite stock by any means, but like, it's the same thing here in principle as like what happened right here. It's exact same timing. It's just that this didn't go up and then back down. And you're like, yeah, but what? You know, there's a 50-50 drop right there on MPW. I don't know what the future holds for MPW. If it's just going to pop to 530 and then dump again, or if it's going to run really hard with everything else. But I'm pretty confident based on the way that this is setting up as well with a massive divergence in RSI. And the fact that it looks like a head and shoulder does not bother me at all. I actually think that's a good thing because that head and shoulder, and it's weird, I'm not seeing it as easily on AMC. I don't know if it's there on AMC. We could check. But I don't know if it's... Why is this doing this? Why is my Finder window like messed up? Sorry, I'm talking to myself. There was a problem with my screen, my other screen. I don't know where this is on AMC, but in the scheme of things on IWM, or excuse me, on MPW, it's like pretty obviously like right here. Like almost perfect. Like this had that push out to the side. This is like your LPS or LSPY. Your initial support is also there. Then it drops, it builds back up through it, drops down again. Then you get the head and shoulder motion up and then back down. It's like essentially verbatim. It's freaky to look at this on, it's really freaky for me to look at this on like RSI or something and see that and be like, yeah, that's the whole thing. Wait a minute, Booksy, what are you saying? You saying this thing's about to rocket? Yeah, I think so. I'm not positive. I can't say with 1,000% certainty. There's always a chance that I'm wrong and it just pops here and then breaks down again. But the timing of the wave and everything is pretty on point. I mean, it's exactly what you would expect. It looks almost exactly like what I call a master fractal, because this would be a range that has a full sort of accumulation. Now, the problem with this one that I use is that this eventually broke out and it did run really far, but then it came back down again and it wanted to trade that low, which is right here. And this is kind of the same problem that we maybe would see with AMC right now, is like, could go up, but in the end, this particular example anyways, that was an indication that we might want to trade really low in the future because we didn't come back down at that point. I think this is a little healthier, in fact, on MPW, because it's already kind of burning down into that zone during this head and shoulder. It's already trading back down low, which actually is a good thing in this case, instead of like staying really elevated and then having to dump later. It's hard for me to look at that and not think that's pretty much the exact same thing. Like it just is. So I've been looking at this for a while, and the reason that I look at it back and forth between MPW and AMC is because it's essentially like the exact same thing, except that AMC didn't make that particular move to the upside, but it does have the same markings in terms of like the 50% flush, the buyback up, so on and so forth. I'm not positive if we would even see any kind of strong similarity, but we could try. What's kind of interesting about this is that the top here generates that creek that then this lays upon. And we don't have like a great version of that here. It's kind of like bowed out. There is a creek cross for sure. It does jump, especially right here. You can see it. But in terms of like that head and shoulder structure, it feels like it's not there like at all, you know. And then it's also difficult because this particular motion, this would be that massive first up thrust. And then this all builds out, you know, as potential to where you may go later. It does, unfortunately, here have that sign of weakness, you know, which again could indicate that whatever we get in this big move could still be met by something kind of nasty later. But at the end of the day, like, I don't know at that point if it's worth trying to compare it to this anyways, because I would look at these back and forth. I'm kind of wiggling it around because it's not framed very well. I would look at these back and forth and do a comparison just to see if it's coming to a conclusion. But I don't think that beyond that, there's much else to look at here. It's like the initial portion happened. It's very, very slow in that regard. This kind of makes you wonder if it's going to just pop and then drop again, or where it is and all that jazz. I don't really like that, necessarily like that line of thinking. You know, it kind of brings about a lot of weird questions. Again, maybe it doesn't go very far. We've talked about 6, we've talked about 8 something. But the build out here anyways still seems really relevant, and comparing it to MPW. So I know people not everybody loves that chart. Some people are like, I got into that and it was garbage, man. And I'm like, yeah, I know. But it might surprise you to know that I'm still holding all my positions from that. Like, it's one heck of a play if it works. If it doesn't, then it doesn't. But look at the on-balance volume, that peak, that drop. It's holding high. It's definitely divergent at this point from bottom to bottom. It didn't even break down here, which is kind of amazing. I don't know. Maybe it will, and we just haven't seen it yet. And that's a risk here that's very real, but it's powerful, man. It's a powerful chart right now. I think there's a decent case to be made that this is still very, very much like a bullish play. Even though on the surface it looks ugly. You know, it does. You guys are like, no. I mean, there's parts of it that aren't that bad, but like it definitely looks kind of ugly all the same. Go to like the daily or something. What about GME? What about it? Yeah, I think this is probably the best way maybe to describe this. I don't know. I would suppose that the only real way to do this comparison and make it work would be to just kind of assume that it's like stretched out or something. Like this middle portion is all this, and then it really hasn't made the other side of these shoulders yet. But then I would have to go back to 2020 and do the same thing, because if I think that that's the case here, then there would have to be some like way to compare it then as well. And I already know that that's not right because it doesn't have that same marking. So what good is it? Well, like I said, there's pieces of it that work and there's pieces of it that don't. I think, if I remember right, when I was in this like fractal mode, if I remember right, I remember doing this and thinking that this whole thing was actually the right side. That it was actually like at an angle. Like I remember thinking that because I thought this was like the January move. And I bet you this is probably why. Now I'm looking at it again, I'm like, yeah, this is probably why. Because I think I gave up on the idea that you could measure it. Like there was a clear like January and then June move here that pushes up really high. And it looks like it kind of meets some of the criteria of this wave, but it's just a steep angle. And then this all kind of would be like a setup to run down alongside the tops here that are developed, which is true. I mean, that is what happens. It does run down along the tops. But the problem with that is then you get into this idea of like expansion, and like it had to be this expanding thing. And then it just starts bleeding into other stuff. So I had, meaning like, oh, now it's like a bigger picture move, right? So you have to then take this other stuff, blah, blah, blah. I think for me, what I came to conclude was that it probably wasn't wise, and this is what I've talked about more lately. It's like not really wise to try to match everything to what I would call like the master fractal. This fractal analysis is kind of botched when you get to iterations. It just starts getting really muddy and confusing, and you start confusing small term for long term and long term for small term. And people think that I don't do it because I'm like bad at it or something, or I just don't like it because of random reasons. That's not the case. I actually spent a huge amount of time doing it, and the reason I don't like it is because I find it to be fairly unreliable most of the time. Like if it matches really perfectly, then you get lucky and it tends to be pretty easy to follow. But a lot of times you just spend hours and hours and hours comparing little micro moves and then trying to fit it into like the big picture. It's too much. And if you simplify it to just giant waveforms versus small waveforms, it's very simple. Like it works really well, really efficiently. You spend a lot less brain power and you get better results. So like that's kind of where I was, where I am with it. And I had a lot of unhealthy debates perhaps about fractal use. Because I find it to be semi like unreliable. And then this would be like a really confusing example of that, because I think that this actually would indicate like more or less looking at the RSI, I'm like, yeah, really, this build out, you can kind of shift it around constantly, but really this build out would have told me that this area right here is all part of like the same junk. And then this is all just part of the build out on this side. And then this area right here would be on the opposite side here. So like it's a more macro picture anyways. And so making it like, turning it into like a micro function of itself doesn't really work. You'd have to say like this peak is here, and then these two peaks, which are like the cat ears, are here before it distributed down again. And that's the simplest way to do it. But again, it's like, I don't really know why you would do that, because then you're just kind of stressing about, again, the where you are kind of thing. And it may not be, sometimes it's just not that obvious. I feel like it's just not obvious. Like this one doesn't have the head and shoulder. One place that does have it that's kind of obvious is here. I mean, it's visually really simple. Visually, like this is very, very much one-to-one in some ways, or in a lot of ways, with this original dip, the buy-in, which is this peak, with then the sell-off, back into a head and shoulder build-up, head and shoulder breakdown. Unfortunately, this is where the structure broke down, right? You get to this point, and it's like the head and shoulder actually lost the trend, which it doesn't do on like that quote-unquote master fractal thing. And so it breaks down, and then that's the end of it. Now it's like in a markdown, and then it resets, starts it all over again. And you see the same exact pattern played out right here again, you know, right there in this LPS, drop, pump, dump. And every time it's doing this, it's creating signs of weakness, and that's really what determines whether or not this does go or eventually breaks down. And it actually does it again right here, and so on and so forth, because it's shrinking. And that's the nature of the cat ears as it goes into the corner anyways, on a macro level. And then that sets you up for a massive drop. It would have been a lot better if I had learned early on the concept of waves, because I use those now to more accurately determine whether or not there's actually a jump, whether it's going to run. And it's a lot simpler, and you don't have to worry about counting sections or looking at like perfect comparisons. It doesn't have to be perfect, because you know where the wave is, you know where the breakdown is, you know where the reaction is, and that's all you really need to know. Don't you want to be able to use a fractal to perfectly time the entry and see the giant boom? Yes, but I can probably count on the number, like on my hand, or my hands, I should say. I don't think it's been more than like maybe 10 times that's actually really worked on a big scale. Because again, you might get it right, but you're probably looking at a smaller picture, and then the reaction is really small. And I'll tell you one thing is that fractal never gave me anything. It really doesn't teach me much about volume, except that what happens in that area is that all of the volume is discovered. Like there's a completion in that zone before it moves on. And if you look at it, you can't do it anymore, but if you look at it with like rewind, you can see that the way that they're traveling in those 1, 2, 3, 4, 5, 6, those waves that are going across the range, they're just filling up all these little gaps in liquidity, which is cool to see that. So the purpose of like having those waves is kind of evident. It's just to do the liquid exploration. But then in order to get the answer about whether it goes up or down at the end, you have to know where the breakouts are. You have to know what happened here and whether or not it's accumulative or distributive, that kind of stuff. Like what is the setup about? And there's nothing a fractal can tell you about that. Not really. You know, unless you have like thousands of examples of upside, thousands of examples of downside, you don't really have a statistical advantage in using a fractal, because the same exact fractal that shows you upside also shows you downside. And when I did this stuff with Astro back in the day, that was where I was like, this isn't really effective. His indicator that showed where those springs were, essentially was like 1-to-1 with this. The problem is that depending on the time frame, just like I have here, like these little micro springs at the end here, and what they look like, I called them replicant springs because they were springs that break down. it's the same motion, but it breaks down. Those are the places of inflection that Astro's indicator would show you. There was a probable move coming in each of these marks. The problem was that you have to, first of all, get the right time frame, and then second of all, his indicator didn't tell you perfectly if it was going to break up or break down. It just indicated there was a sense of impending turn. But I already knew that, so I was like, this doesn't really help us. It's just kind of another, in my mind, it was like another reason I shouldn't be using this, like as the basis for everything, because even though I think it's true and it's a great learning tool and a great example of a wave and understanding like the components of the wave in terms of Wyckoff and accumulation and distribution, I did not find it very helpful in determining final outcomes, especially since, again, these all look the same. Like this area and this area from a fractal standpoint are nearly identical, and the way you would see the difference is that you'd have to know what distribution looks like versus accumulation. So at the end of the day, it's kind of like, why do we even bother tracking the fractal if we just already know like the wave isn't breaking and it's distributive? Like it's super simple, you know. Then the fractal is just adding another layer that doesn't need to be there. Now I'll bring it out every now and then because I think it's cool when you can find the comparisons, and it's not irrelevant. It is relevant at times. And there's people who do really good fractal comparisons, and they'll be right for long stretches of time, you know, until they're not, because it is there, you know, especially in like bottoms and tops. The bottoms and tops on AMC, they're habitually the same, but I mean, the same could be said about anything in the market. So I find that to be self-explanatory, I guess. Like, they kind of can follow along pretty well, because again, most of the tops look like the same. Most of the bottoms look pretty much the same. So those waves tend to be very useful. You know, right now, I suppose if I were just using like a fractal or something, I probably would be a little nervous, you know, to say that it's about to move, because if I'm using a comparison to like a build out that we've seen in the past that it's exploded, it looks really bullish. If I'm just using a fractal, it'd be hard for me to look at this and suggest that this isn't just doing this, and that it technically could already be like done. You know, it could have already pushed up to the top and it's breaking down and it's doing like waves down now until it finishes, and it could go really low and blah, 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 blah. And I could make those cases, right? Which is exactly what we're doing anyways. We're saying that it could go potentially really low if it doesn't break out here. I think it would be hard for me to look at this and suggest that from a fractal standpoint that this wasn't just like this move right here. It almost looks identical. In which case, this would be the distributive element down, potentially where you are now. And then this would be like, I don't know, break out and do the same thing again. Really what these look like to me now are like, if it were facing down, these would look like LSPYs, you know, that just continually sell down until you get to wherever you want to go. Does that make you feel good? No. Probably not. I mean, it's kind of interesting though, because I think with that in mind, if that's the case and this were like walking down still, I wonder if we would have looked at this really differently. Like if this had originally, if I use this one and just looked at it as like, it's a cat ear going down, which it makes sense, it'd be like an S curve. If we would look at that and say like, well, we think that's going to happen here, and then what, you know? Well, I mean, in some ways, it already did happen here. There was one, but if it were like larger, it may not be a big deal. We'd probably just look at it like, oh, it's going to go back to check something else. What's bizarre is it did though. It's already like below, it already came below here. It's just a weird question, right? It would have to be some kind of like massive distribution if this were just like the leg one. Because that doesn't make me feel good. No, it doesn't. And then we would have to go back and say, well, we were kind of right in the beginning about maybe what this was, where it was like a pump and then it dumps down. You're like, what do you mean the beginning? It may come as a surprise to you, but this actually wasn't. I thought that this wasn't like one of the main things that I drew out, but it actually was. So I know that that's easy to say in retrospect because you're like, well, it already happened. You know, you could make an argument that you knew it or something or whatever. I don't think that that was a likely thought in my head. Like, I don't believe that. I thought it was the most probable thing that was going to happen. But we did have like a couple drawings, a couple models for that kind of a move. And there was a similarity to certain regions that I found to be pretty telling, I guess. I don't know. So I had a few charts that I had drawn out to talk about possible upside, I guess, and downside on AMC. And there was a really low push version of it that I used. This was a while back. I'll try to show you. Hold on. Not a long time ago, but I guess it was over a month ago now. It was before earnings. So like prior to earnings, I had shown this chart. Let's see if I can zoom in. I can't zoom in on it. I had shown this chart, and it actually has a potential breakdown here going up towards the region between 505 and 548. And there's two markings because I thought that it would probably go to here or up to the top, and then it could just drop right back down. This is surprisingly very, very similar to what actually happened right here with this pullback through. And it did break down much the same. It's really odd. So in my head, I thought that might be a possibility, but that was before earnings. And obviously, like, we didn't use this chart. I probably have it somewhere on here. But I remember arguing about how this could indeed be enough to drive you all the way back down. So now when we look at it like we're looking at it from kind of a bullish perspective this moment, but we had looked at it from a bearish perspective like a week ago. And there certainly was like a decent bearish case here that it would just drop straight through and keep going. What's interesting though to me now is like I'm thinking about that quote unquote like master fractal business again. And I do wonder, there's some underlying principles here about that final sell-off that might be relevant. I don't know. I'm not sure I'll be able to get to it today anyways. And you guys are probably like tired of talking about that, but yeah, I don't know. One of the thoughts was that I was just thinking out loud in my head, this was something that you would come back down to. It did it here. I think later, after this pushed up, it came back. This was December of 2021. And then by the 30th, it was dropping. And by January, it actually had come back down to this mark. It came back low because it basically triangulates with this bottom. And it drove the price back down pretty far again. We could look at it. Let's take a look. You guys are like, what's your point, Booksy? Well, I guess my point is that even though it's not maybe the most preferable of all these outcomes, there could be one that it's definitely a lot more negative. But there could be one that's like this. Where it pumps up and then it comes back low again. And it could reach up to like near 15 to 20 before it does that. This actually goes all the way back up to, this was a big sell down, but this is a kind of a midway point. It would be like us going up to 20 and then selling back down and coming all the way back down to the bottom. It's kind of an odd setup if it did that, but it's not impossible because if it jumps the creek really fast, I'm more inclined to think it continues to go up, but it would throw a lot of people off if instead of going up again, the chart deviated from like that whole January to June thing. Definitely throw a lot of folks off. It's kind of like this too. This is a really similar model right here. And you guys are like, what are you talking about? Well, so like this would be like the first push, and then this would be like the stuff that's floating. So it's above. It doesn't come back below. So it doesn't go back down. Instead, it rockets up higher and actually goes really far, but then it breaks down. So it'd be like us going up to like 20, and instead of like building a reaccumulation, we actually do a second top, and then we come back down all the way to 3. I've never even thought about that, but it seems possible. You guys are, well, then it's going to go to 0. I don't know about that, but I think that it would be sensible in some ways. If you're making like a macro bottom, then it sort of turns it into a huge, that'd be so different. It turns it into like a huge bottom within a bottom. You're like, what? That would be crazy. Scaling wise, that would be bonkers. I don't know if I would enjoy that very much. I suppose it would be like iterating the whole chart all over again, which sounds like a mess, but in my mind, I'm like, it's not really that complicated. Because like there's a little bounce here right before this like big bounce, right? And then it sells all the way back through. In theory, if we were to look at this closely, we might find, because this has a sign of weakness in it, that this actually looks really similar to the bigger picture. And that does tend to be the case, as it does to the whole. So like, in theory, you could have like a little micro version of it that doesn't break down. This is like what we're seeing right now. So instead of going low, it stays high, and then it goes up again, and it does go quite far. It goes like really high up. But then that one actually does break down. And then it becomes like a micro version of what we normally see, which is like, you're like, what are you doing, man? Which is this, right? So it's just the same exact, it's the same motif that you saw here, but it happens on like a bigger scale. But this time when it comes down, it does break down. And that's how it gets back to that low that was being set up here, like long term. That would be wildly different than anyone's expectations right now, even my own. Yeah, that's actually really possible, because if they were to leave it behind and mark it up, they could essentially create like a massive distribution off 20 and drive the price low, and it would appear to us to be broken, except this may have caused that to happen right here. Oh. Yeah, so like I was coming from this point of view right here, like that's kind of what happens here basically. Is you generate like the same thing, but you do it higher up. And then, yeah, it's essentially exactly the same, because what this is it goes up, then drops, and it pumps. It builds out, but it doesn't drop low again, and then it goes up. But this time, it does drop low, and it comes back down. So essentially, like this cat here builds out to the second one. There's 2 tops here. Right? And so the first one doesn't actually meet the criteria. It doesn't come back down. Like the first one stays high. It could have dropped low and come back to the bottom, but it does not. And it would have made sense if it did. There was a sign of weakness. There was a double drop here that went really low, but it never does. Instead, it's like pocketed for later. And there's a move later that happens that goes really low. And a lot of it's based on this, I think it's this creek right here. It's tough to kind of illustrate it, but it's the major jump right there, and it comes back to it. And then there's a weakness. I doubt this is right, but I'm going to do it anyways. It would be surprising if this one were perfect. Okay, I told a fib. That is correct. So there's a pretty decent case to be made that this needed to come back down. This is not really working. This one isn't. Nah. But I mean, it would have given you the idea that this potentially could come back low. These are the movements, especially this sign of weakness right here was definitely a big part of this. This is actually where it goes to later. It's used as the trend. What are you saying, Booksy? Well, so there's enough similarity right now to suggest that this is indeed possible, that this goes right back up to the top, right? At the top of the chart, at least to 20s or something. But what if then that this actually, all these like little weaknesses that we perceived, especially this red line over here, what if this actually builds out a case for like a much greater distribution later? It's an interesting thought, because I guess I always sort of imagined that if it were going to happen, it would happen now. Like it wouldn't happen after some big run up or something. That is very interesting. Well, I mean, it's just different. But it would make it like this was a bottom of a bottom. Like, if that makes sense. It's like this is a big bottom of a big bottom. If you're going to like maintain the price range and not go up to like 80s or something, that would be one way to do it. But what about all that stuff you said about going up to 80 in 2026? I guess you could still do that, though. It happens all the time on AMC. It makes massive swings. It's not impossible. I'll tell you that much. It's just a weird setup. Gosh, that would screw over a lot of people. You guys are like, no way it's going from $20 down to $2. Why not? It's done it before. It would make more sense to me to not do that, but like, I would never say it couldn't do it. I think that would be a big mistake. Like, huge mistake to say it couldn't possibly do that. Well, so this pivot goes really low. What else is there? What about the main wave back then? That main cross, did that tell you where it was going to go? This one certainly does. This main jump here absolutely tells you where you're going to go later. So maybe back in that example we just looked at, maybe that's similar. GME is up to $30. We're going to check that chart out in just a minute. It's up about 3.5%. I feel like this is going to be kind of right, kind of wrong. So on the master chart, the one that I looked at a minute ago, the one I talk about with the waves, this wave right here, this pink wave, it looks like perfectly met. When you look at it from this point of view, it does not look perfectly met. It also doesn't really show you, it looks too steep to me, but I'm guessing it's like pretty much the same as this line, and that you're just kind of fudging from that point forward. It looks a little steeper, but it might have actually pointed towards where we go way later. It takes a really long time to get there. Yeah, I would say it more accurately points towards that than anything else. Which kind of makes sense because then this becomes like a distribution that then settles back to it. Seems a really like small thing. Like why do that? But this again, it's like bear direction. Like where were bears trying to head off, you know, when it took off to the upside. It's just an idea. Don't let it ruffle your feathers if you're like flipping out about it. I wouldn't be saying it if I didn't think it was somewhat interesting or possible. But I don't think that everything that I say ultimately happens. That would be silly. I would suggest to you it's kind of like this guy we have right here, though. So this is the big creek cross. If it doesn't hit this one, then there would be, and it did check it, but even if it left from here, it doesn't make a lower low again. It's at 414 right now. It's testing that line. Maybe that's like a long term. We're thinking it could come back later. It could be a really long-term drop that happens like next year, April, May, June kind of thing. It's pretty fast. It's more in line with like the original thought that we would like potentially pump here and then drop, not with the idea that you're going to go to like 20 and just sit there and then advance. Well, all good comparisons. I think that's probably a tale for another day. Like, why? Because I'm not streaming all day. I got a lot of stuff to do. Like I said, we're going to visit family. And so, yeah, I mean, this is still makes sense to me layup wise. But then how high it goes is another question. I think it would be weird if it went up here and then distributed again, but it would be in the right place, you know, like it would be right here in roughly April, May. So the thinking behind it seems a little wonky, like that couldn't possibly happen, but in reality, that's not that far off. It would be like, it would look really similar, but it'd probably have like a weakness earlier on, like here, and then you would have like an upthrust. And everyone would think it's going to do the same thing, and then it would actually dive really, really low. And like then it would finally come back down. So instead of advancing past this marker, it retreats. And if you look at the shift chart, I want to say that actually might make sense because I think that would indicate, yeah, like a greater creek. Oh, snap. Wait a second, I haven't tried that. Why didn't I try that? I did the move here. It should be the same. Well, of course it's the same because you drew it that way. What is this? I don't know what that is. Yeah, that would be like a parallel to the top, which makes sense. But then what I was thinking is like, what was the word? Oh yeah, the second creek top would then define, because we did just make a creek hit. That one. This is tough because it's kind of like an estimation until it isn't. And I don't know how I did this. I'm not sure. It's anchored here and I mean, it looks right, but I guess off this bottom here in November. Let me do it one more time. One more thing. I think I got the right mark, but I want to make sure. That one, and then over here in November. Well, let's do that. $2.20. That's really close to 226, which is our target in August of 2025. That would be pretty late. TANH is crossing 1639. Not sure what that's about. Maybe we could check it out in a minute. What does that mean, Booksy? Why are you doing this to yourself on the Christmas episode? Merry Christmas. Now get to work, you lazy bum. I don't know. Merry Christmas, you filthy animal. Kind of goes from nowhere. It works right now, actually, without the shift, because it goes backwards to the break. Really goes backwards to the creation of ape right here. It's almost exactly where it is. It's a little odd though. So it's kind of a catch-22. I don't think that it makes as much sense. The real reason I wanted to do that was I wanted to see where that intersection is on the shift. It's at, that's creepy. It's at 506 on the shift chart. It would be like up here filling that gap, but then not continuing, instead going back down. It does not leave a lot of time to then advance. It's kind of backwards. It's almost the same timing that you would need to advance to the next level. That's kind of weird. So it would be really fast. It would break down by April. Maybe after this earnings, shortly after that. And then you'd have like an S curve back down to the bottom. Don't really know if there's a good way to measure that, but maybe here to here. Yeah, so that this becomes like a 50% mark at like 540. Which is the current top area. Yeah, it's a little wonky, but like it does work. But why would you do that, Booksy? Why would you break our dreams? 380 down to, yep, the 380 top right here, down through the middle that we just made at 550s, takes you down to 220s. So it is the midpoint for the move. So I think what would happen is it would like fail, if you had too much selling maybe, you'd fail to advance pretty rapidly. And then you would hook underneath 1380. So it would look okay at first glance, and then you would think that it's going to do some kind of a similar build out to the reaccumulation, but then it would break down the other way. It wouldn't advance far. It would lose traction real soon, and then it would go underneath 1380. Drop, and it would 50-50 around 550, which is weird, but that's the number, and that's really where we just made that top. It's pretty clean as far as the math goes. So it would not be a pleasant trip by any means, but you would basically sell off from April all the way through August. And I know I've said this before, but there is a February marker. So it is completely backwards. It looks like it's completely opposite of what you would expect here. It really does. But in theory, when you look at it from this point of view, these are two tops. There's no denying that. It doesn't matter if you want to shift chart it or do other things or not. It's a lot like what happened here when you have these peaks. Like it could just go up, back up really quick, check it and go, which is what happened right here. But then eventually we do come way back anyways. After we push up, we come way back down to check it. It might make more sense though. It'd be like if back in the day, this didn't ever go low, which is what we're saying. So instead of going low, this stayed high up, stays like up here, which is essentially what we're experiencing right now. And so instead of going down, it stays up. Shoot. Actually, that would have made a really good case for it, because I think you would have looked at this and said that if this had come up and done a distribution up top and not done the breakout, but kind of like fainted and then headed down, I think it would have been a really easy one to argue. Oh yeah. Especially if this were significantly high, which is what they did. Because then you'd have to say like there's a pretty open space to come back, which I hate that for us, because that is a lot of what AMC likes to do. It does this quite often. Like a lot. Like it's used that kind of same picture right here, right here. I mean, really all of these are the same thing, where you generate like a really steep creek, then you break it, but you don't check it, and then you dive back through to get it. Talk about a massive shakeout. That'd throw a wrench in a lot of people's plans. What's interesting is that it's terminating like right at the same time that the other one is. Almost like the bearish side is, it's like they're giving you like an opposite look, which is really interesting to me, because I'm like, that kind of mental game is really messed up. But to go all the way up to like 13 to 20 here, and then to distribute back and then start dumping, would really mess a lot of people up. It would take a long time. It's like 4 months or more to come down. It's essentially like the same move they made right here, but they're just doing it a little bit steeper. At first, I'm like sitting here thinking like, well, that's crazy. But then I'm like, it really makes sense, because if you didn't hold, this is like the main creek. If you don't hold it, that's exactly what it would look like. You would come above it and distribute, and then drop right below it here, and probably get a little bit of like a bun 2 kind of motion through here instead of just 1 for the middle of the S curve, like a 1 and then down 2 and then down. So it would look like this off the middle. Ugh. And then this is a January, June, or this is like a January, June kind of thing. But it starts this fractal all over again. So you hit the top, and then you basically go into a massive slide, just like we did here, but on a small level. Yikes. Oof. Let me tell you, I gotta be honest, I don't think I thought of that until this, because I was imagining the same thing happening as a result of other conditions being met, and the fact that this has that same trajectory is really important. It's hard for me to imagine why you would do that and then pump it all the way back up by like February or something. But it may not be that unreasonable in the end. If that were to occur, oh no. Oh no, there's another trend there. There's 2 creeks. So if this first creek is jumped, we got to be really careful that we don't invest further until it jumps a second creek. that's going to be pivotal, because if it breaks here, it's going all the way, I think it's going to go all the way back down. Why, Booksy? Because it won't check it. There's not enough time. I won't guarantee a lot of things in the market, but I'm saying right now, like, if this happened and it doesn't check it, it's going to leave a massive creek here that's like wide open and the huge gap down below. It's going to triangulate in an ugly way. It also triangulates to like the level that we thought it would go to, which is essentially equivalent to like $1 in value, which is 226. There's no doubt in my mind that that's a possibility. It doesn't look like a possibility to some, because they're like, well, then you're just throwing all this out the window. What about the second part up to like 80? Why can't it just do that and then come back down? Here's what I think would be in the mindset of an operator who would do this. At first glance, it kind of seemed like that would be a bad idea, because you're like, well, this is similar to what you said before, but instead it's not doing this quick pump and dump, instead it's doing this massive one. Why? At first, it looks bad, but in theory, if this is a real spring and this is a massive auto reaction phase B top, in theory, this is like a massive range, which could give you a huge markup value very, very quickly, which would make sense to get to February. I mean, it looks like nonsense, but believe it or not, like, that's just a humongous potential range. So it doesn't have to be like one-to-one with anything. It could be very much like a push out here and then like straight up. But here's what's really getting me right now about this. At first glance, it looks really bearish, but actually long-term, this is really bullish, because if we just do the same thing that we did back here, yeah, you're going to get out sooner, maybe if like 6 months earlier or something. You might have to spend more time in AMC in this model. But the thing is about this is that in the, because that could yield like a massive, 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 massive run. And the thing about this is like all at once, is that if we were to do the exact same thing as we did in 2021, right now, based on the way the chart is, it's very different. The way we went through these bottoms is like really different. We never traded that zone down here. So in theory, what you end up with is the same exact thing that you already had, but then you're going to slide even lower. So like in theory, I had talked about this before. Like I said, well, maybe just come back down again to the bottom. I think potentially it could be worse than that, because we never actually traded it. And it sounds like, oh, it's never going to do that. You know, people will say that, oh, it's never going to do that. Never going to come back down. I don't know, man. I think this kind of a slide down, to me, is like way worse, because this is a huge percentage loss. Massive 97% loss from top to bottom. Sliding from 20s now, or even just like 15 or 16, if it doesn't go that high, is only like an 80% loss. But then you have this massive gain. And here's the thing about this, is that at first this looks really bearish, but if it's done right, then it doesn't actually have to yield bearish result later. Like this does become bearish later. It just did. It makes a lower low, so on and so forth. If you go ahead and make that dip and get the spring here and trade that bottom, I think what you would find is that you get a massive push, maybe going into like January, February 2026. And I know this is really different. I know. But it's important. And you don't have to worry about the bottom necessarily. So unlike this example where like this is now left open and you could be running like a massive schematic to pump it up here and then dump it all the way back down, long term this could actually be a lot stronger, because you don't have to come back. The lowest you'd have to come back to is like this creek maybe, but I would suggest that the lowest you have to come back to at that point is like here, like this top. You wouldn't have to come necessarily back through 18 very much. This could be like a new floor if you take the longer route. So the M shapes 1, 2 and then 3, 4, and actually you could end up with like an even bigger run than what we've been talking about, which is just the 80. You could end up actually running up to the original top even at like 200, because it builds out a stronger case for less downside later. If we just took off right now and went to 80, a lot of you guys would just sell off anyways. But I would bet that it would drop all the way back down too. I would put money on that. I'm not going to, but I would. You know what I mean? Like in theory, I'd be like, yeah, it's probably going to come all the way back down. And I genuinely think that the operators are seeing an opportunity here to do this massive pump and dump, just like they did before. And frankly, there really wouldn't be a large amount of evidence until maybe 2029 again. The books are getting better, but it takes time. It wouldn't be a huge amount of evidence that this wouldn't need to come back down to the bottom. This is an interesting idea. It's hard for me to like sell something like this because it looks really ugly, but I actually don't mind it too much. And it might explain why we got 2 run setups. If you don't know what I'm talking about, you may not have been paying attention the last few months or whatever, but we've had a lot of run setups that look like they're breaking out late summer. This could explain that very well. Before, what I had done is I kind of just thought, oh, it pushes up, drops down, and then goes up, back down. Or it goes up to like 869, then dumps down, and then bounces out into March and comes back down. This gives you both. It gives you both a January run and a late summer run. And this is the one that kept coming up on the bigger picture with the larger wave until I like shortened the wave. So I think that's pretty interesting. Like that wave didn't seem completely wrong to me when I did the bigger wave. It looked right. It kind of implies that you might hit this low, I mean, frankly, and to just take off. It looks like a repeat of the same thing, and it kind of is like a widening, but I genuinely think that might be possible. I'm a crazy person, you know that. It's going to depend. At least we have an objective like possibility here, right? But it's going to depend largely on something that's also quite objective, which is the jumping of the second creek. So if the second creek doesn't go, you would know immediately, like, get the heck out, you know? Because if the second creek didn't go, I think it's very likely you're dumping back through. If it distributes here, there's no reason you would do that unless you're going to go back to this creek, and I don't think there's be any reason to do that, especially if you've already checked it, and if there's any kind of sign of weakness early on. So we would really want to be careful if it hits this top area and like kind of hovers around 14s. I think it's very possible that it attempts to run up to this creek and it fails, and then it like slides like really bad, which is really common for us. It's happened before, and it would screw over a lot of people who are thinking that it would have to do like a June run. There'd be some kind of news or something to justify it, but it would be there. And it does seem a little silly, but if you think about the principles of the market in terms of like where that liquidity is and where we are in the scheme of things, really what it would be is like a massive 1, 2, 3, 4, like we've talked about, like that concept of big gigantic spring bottoms, you know, having like a massive reaction, coming down, going up again, and then coming back down. It's pretty much the same thing I draw all the time. When we talk about the springs, they're like this, right? And there's a middle that's kind of flat, and then it goes back up again. Some of it's relating to this, but we saw it recently. Like this was on the micro. It's on a lot of these bottoms. It was right there in May, and it was another part of the reason why I was really bullish. what's interesting is this happens in May, and it does it again right here, by the way. There's like another one, and then it goes really low, and then it reverses, right? This is similar to what we see here, but what's interesting is in May, this actually happened after a ledge drop. Sacre bleu! I don't even know what that means. I just know that you do it when you're revelation of something. It happened after that drop. Do you remember that? Because I remember that, and then I'm thinking about that drop, and I'm like, isn't that drop like the place that the accumulation just kind of looks like it's breaking, and ultimately it's like the wave up is lost on that drop. Like the rising trend is lost right there. It dumps backwards. It reminds me a lot of the cliff. The curtain rod drop is a compression on the second cat ear. That always happens. This has happened in March too, right before the bigger drop. There's a compression on the second cat ear, and then the motion that's lost is more or less this like original uptrend is lost, and it's met later. We come back to it later and then lose it again. But this is interesting to me because it's like that motion. This is the drop below. And it's just like a massive, like quadruple flush looking thing. That's essentially what I'm drawing on the big picture. I know it's tiny, and I get that, but you think about like what we experienced with that big drop in after the earnings thing, or after the flip. See that? I know it's not the same, but it is very similar. And then this is like a massive S-curve back through it to the bottom. Come all the way from the top all the way back to the bottom. We've seen this before. And I think I ever remember having a talk with somebody about this when they said, no way it's doing that. And I said, well, this happens all the time. You have the pump up, and it creates and generates like a phase B top, and then it drives the price backward all the way back through like the center of that structure. And the center of our structure is around 5. So it would be like a perfect flush, maybe not perfect, but it'd be really close to perfect flush around 5 in terms of like the halfway point. It's in the right spot right here. That's where the halfway point was at 550. Seems weird until you think about big picture, because we did have a compression and then dropped. We did do that. So if it's reacting like really violently, which we know it is because a huge amount of volume, then they'd have to take it back up to drive the price back to the ground again, kind of like they did here. There's a huge compression right there. And it's where the uptrend is lost. Huh. Huh. So in my head, what I'm thinking about is like, let's say it did happen in the future. What would I look at that and say? That's the way I'm trying to think about it. I think I would say that makes sense. In that case, we may not, if we see something like that, what it would probably look like is an upthrust. It might fill the gap or get close to it and then drop back beneath like 13s really quick. And yeah, that would make sense. There is a reason to suspect that might happen right here. you see this rise? If you go from the bottom here to this top, that's the last place it was checked. That's right where we're going. But then you would dump beneath the liquidity shelf there at 13. So it'd be like up and then right back down. And then you try it again on weakness a little bit later, maybe at like earnings or something. And then it would fail and it would not advance over that creek. Talk about a misfortune. So in my brain, what I'm thinking about is like, if I saw that on the chart later on, right, and I saw that move up and then the drop down, what would I think of that? And I probably would make the argument it's still the same thing. And really it is, because this ultimately fails, unfortunately maybe, to jump any kind of real major creek except for the lowest possible one. It just takes off, that's great. If it continues, it continues, but we would actually be able to know where that is. We would be able to see it in the top. It's not like we're going to be blind to it. But what's critical here is like, that's normally the way I would expect it to go around the wave anyways. Like if this eventually does break, I would expect it to go up and then back down if it hadn't checked. There's not enough time between now and like January 10th to do any kind of adequate check. So even if it bounces here and hits it, it doesn't matter. Like it's not adequate. And then you could have a check later while also coming back to the bottom. It's one of those things that I like don't really want to have happen, but I suppose if it happened, I guess I wouldn't be like caught off guard. And it does kind of make sense. It's just another model of the same. It's another model of the same kind of thing we've seen before. So it's not one of those things where it's like, oh, well, Booksy had an idea and then he just worked around it till it fit. Like it really isn't like that, because there's plenty of examples of it. It's all over the place on the chart. It's just not the one that I would have picked, because I was already thinking we would do the up down first, but we didn't do that. Instead, we stayed high, which again, if I had seen that back here and we'd never come back below, I would have said there was a much greater chance that we were going to come back down right away. I'm just being honest, like, especially if it made a really high creek. That's the key here. I don't know why I didn't think of that earlier. That might be a big part of the reason. We know that it went back and checked certain levels and stuff, but I think it might be a big part of the reason why this is as high as it is. Because they're establishing 2 points of contact right here that are going to define a creek that you're going to go to later. I just sort of dismissed it, I guess, for a lot of other things, as like a liquidity test and test at the bottom when I saw the chart shift. Now I'm looking at it and I'm like, I don't know, man. It seems kind of like that would be intentional. If you're trying to drive the price back later and if you don't check this and you have this really easy liquidity test in mind, that's how the waves are. Back down. It does make me wonder if we even get above 1380, that original price. I feel like we will. I think there's enough evidence here, but it's an interesting, really interesting idea. I know some of you guys are like, man, that's crap, dude. You come up with all kinds of stuff all the time. It doesn't work. Yeah, but it's usually pretty darn close. Like the concepts of it, of the waves, are usually there. In this particular case, it's about what's not there, not about what's there. And about potentially what happens if we don't do that. If we don't get that drop, I think the door is open for, I think I'd have to say it is. The door would definitely be wide open. And that steep creek, man, it just hit me like a brick wall all of a sudden. That it makes perfect sense that you would drive that price I mean, that's just, it's like painfully obvious, I guess, once you kind of see that. That's totally possible. Like right now, they're establishing it as a support, and then after you drive it up, you use it as an anchor when it intersects that region right here at 550. It's like triangulated. Because you'd also have that. You'd have this rising support, which we would call like an ice level. It's diabolical. But it works. That's interesting, man. Well, that's definitely going to go down as one of my least favorite charts, but I guess that any chart that's a good chart isn't something to stress about. If it works, it works. I'd say least favorite because it's like I don't really like the ideas of it. But in reality, we don't get to control it anyways, so there's not really any reason to stress it. So it would be a move up. I gotta get those lines though. They have to be in the right spot. Well, I'll do this. I'll put it over here because I know that's the intersection. This is the creek intersection right there. So it would be like going up to, rapidly going up to the top here, like nobody's business. And then that looks wonky, but it's actually like the same move we already made. And then, yeah. And then instead of spending more time at the bottom like we did here, it's a rotation, and we spend more time at the top. And we try to break out. So this becomes a massive rotational symmetry. Booksy's proved right about waveform analysis. I'm all excited because I'm like, yeah, look at this, woo! And we're all like, yeah, it's green, yeah! And then it goes up again. It might even hit it earlier and then push up the second time. I mean, I don't really know for sure, timing-wise, how that would need to work. You guys are like, so you're basically saying it's going to like go straight up again? Maybe. Yeah, it may be like a squeeze. I mean, it could be that fast. I don't know. The key thing here is that it is a rotation. It doesn't check. I think that would be the big tell. Like, because then what the problem is that you have like a huge move. This becomes like a 50-50 kind of thing. Son of a biscuit eater, man. Son of a biscuit eater. Hot diggity dog, Booksy. What in tarnation? Actually, what? That actually looks really good. Say actually again, Booksy. I dare you. Actually. Ah, that's it. I'm unsubscribing. Forget this fool. That's pretty clean as a rotation. Now that one is a lot lower, but it also would be one I would have to consider. And then this one's higher up. And really, both of them might be used. So then you'd have the gap fill marker roughly at 291 or whatever it is. I'm going to put 292, but you know what I mean. And then the bottom at like 390 or 239. And then these are low. This would be like a low 226. 226. So this ends up being the it's pretty gnarly. I hate to say it, but it does make sense. Because the gap would be filled. You wouldn't have any real like argument except for 45. But then after that, this is where things kind of like get bad because I think the rotation does the same thing basically. How long did this take to walk down? Ugh. I know that's the same too. That's like the same line. Zigzag. You're like, please don't match, 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 please don't match. And then it kind of matches. Please don't match, please don't match. Tough. It's tough. Doesn't match perfectly, but it matches. The trajectory would be roughly the same. So we've got an in and an out and in trajectory that are roughly the same. So this is slightly off. I think previously what I did is I went down to here instead of the top of the gap. This works, this 53-degree angle or whatever. If we did that, it's just a kind of an indication of like potentially about how fast does it go. And that would be once it gets below 13. So again, in theory, it's not like perfect science here, but pretty darn close. 1380s, which is the one that kept coming up. I mean, that's really close, guys and gals. It just is. Super close. You don't have to like it, but it's there. And then this is the floor that wasn't checked. What is it, like 556 or something? I don't remember. The high was 5 something. Yeah, it was 556. What an ugly chart setup, Booksy. What a wonderfully vivid, horrible imagination you have. I mean, that should be quite telling, the fact that this line even lines up. I'm not trying to make it look like fudged, but that is the parallel currently. I wonder if we generated a trend and we just didn't really notice. Like a massive trend right here. And it's hitting the bottom and it's got to go back to the top again. Even if it were exactly the same as last time, it would go up here and then like come above, you know, and then like break out. So either way, it's kind of like that works too. It would be much the same. That's the wave. 1, 2, 3. And then you'd come back, so it's like an ABC correction, and then you come back down with a 1, 2, 3, 4, 5, just like last time. Wow. Yeah, I think what's going to be most infuriating, I suppose is the right word about this, will be the lack of continuity if it doesn't go there. I'm just recapturing my trends again. I just took them away. I mean, it's not the worst thing in the world, but it's definitely not pleasant. It would be worse, in my opinion, to go to like 80 and then go back to like sub $2 or something crazy. I mean, that to me is like a far worse evil, you know, like than the other alternative. So, but that's just me. I'm like not a fan of doing the same thing again if it means we're gonna dump again. Yeah, it's hard to deny that's pretty spot on in terms of triangulation, like right there. I gotta be real though. I don't know if these trends are quite right. It really depends on if the I mean, it feels right to me. This is starting to look really close to what I would expect. I just don't know for sure. It may depend a lot on whether this is the bottom also, because like even though these parallels are parallels, they don't have to be like perfect. All we can do with charting is just get it as close as we possibly can, you know? Like there's nothing else we can do. So we try to make it as perfect as possible, and it may end up that it's not perfect or something. But so this is 15.7. This is 15.59. Yeah, I don't know. I don't know which one it'll be. I'll just do the bottom one, I guess. It's complicated because it's like that actually looks right. That looks right to me. That might be the unwinding. Yikes. 590 triangulation. You know, I never thought to attach that low dip to this dip. But that might actually be where it is. I'm gonna make that one really light. Yeah, I looked at PGHL yesterday, and it's kind of moved the way that I thought it would move. It's not. I don't think it's made any real strong advances yet, but I thought it was going to come down here and hit that mark and then maybe build out. It's still possible it could drop again and go retrace back to the bottom of this rising widening. I mean, that's a real possibility here. It could come all the way back down to like 1. But my first thought was it'd probably only come to here and then break out and then go. So presently it's sort of in that motif of like sideways, and then it might just go. The only real way to make it, I mean, you just kind of create fans here for the purpose of just seeing where the creek break is. But also, once it breaks all the creeks and it returns back over the range top, which looks like 123. So it'd have to continue to break out here and then back again at 130. And I think I said this before, but it was like kind of unfortunate because it's a really risk-on bottom. And ultimately, you probably want it to come back above 130 before, and then make a higher high before really considering it a good buy. Because in order to kind of confirm that upside, it has to come up here and not distribute again. And I hate to be that guy because I know that people want things to just kind of go and go. It's very possible this is it. There's a little M here. But if the next move is up high, like to 145, and then it backs up and it kind of sits here, that might be a really good place to buy. You know, to have that kind of buy up would be really strong. But I don't know what's going to happen. The other thing is like this could be distributive as a second top. That's why I'm like nervous. waves are like that, right? So they're building out. You just have to see the continuation. You wouldn't want this to like push up and then sell back down again. The likelihood there of going back to the lows is a lot stronger if it distributes at 140. Does that make sense in terms of like what we talked about with the price target for the wedge? Does it make sense in terms of like a parallel? No, I mean it doesn't. It stands in contrast to it a bit, but the nature of a breakout is continuation. It's not just the breakout, it has to have the support and then continuation. So like that has to happen. I think if we get that if it holds here and then it can continue, I think there's a pretty no-brainer move up to 2. Yeah, I did say that because bullish is better if it goes low first. If it had stayed up really high and then tried to push again and failed, then you're likely going to drop lower, right? But even still, it's not like you can just check the box and be done with it. You still have to watch it move. You still have to watch it make the advances. So it's currently like in a place where, sure, it could just drop again, be an S curve. It hasn't broken this final creek. It's very possible. It's just creating like a widening channel. The reason I would say that right now is because of this. Notice that it went down and it retested that particular top, and now it's like resting. So the targets that we picked were good. They were good targets, but like it's worked out. It kind of stopped at each level and bounced. Great. Well, that's just fib targets anyways. It's pretty straightforward. But notice that this last push before it started really kind of coming down in that what we call a bearish divergence here, that's where it ultimately comes back to, and currently it's creating like a parallel. So you can't ship it until it's out of there. Once it gets out of there, you could have a really big move to the upside, but you still have to watch and see it form that support. Then the trade, in my opinion, ultimately would be like, okay, it's made the advance, it looks healthy, it's not distributive, it's holding levels, it's making higher. It should make lower highs as it goes, like a wedge, and higher lows. And then you don't want to see it close beneath here. You'd want it to see it kind of strong. That's a sign of strength. Then I would say that the move that's the trade. It's like a 40% trade up to like 188. It's between these two markers. I can't trade this. So it wouldn't let me trade it. So whoever runs this, I can't trade it. So I don't know. I checked it out yesterday. It said I'm not able to trade the ticker, so. It is what it is. I don't know. It just won't let me trade it. So yeah, we're at 417. We're pushing up above 415. That was kind of checkbox number 1 here. I have a lot of different charts open, and obviously I'm not going to reset them all right this second, but we'll look at this one. This is the one that I was talking about earlier. It needed to make that jump. This is right on the line, so it just wicked to it. Very, very close, but not quite there yet. Could be again, big afternoon. That's what we were saying. GME was much the same way. It needed to kind of approach here and then break, and it did. It did find support at 29.27. You can see like the 1, 2, 3 candles around it. So it held this support high. Didn't ultimately make a back test here. I'm not a huge fan of that, but I would look for a back test here and some kind of support on either 29.88 or on the bottom. I don't think it made a higher high, which actually is good. I'd rather it come back first, like I said, and make that move. But it looks like it tried to break out, and it did. So that's good. That's all positive. That's good for the setup. AMC not quite out of it yet. It's still kind of bound by its setup here. Well, we're getting there. I'm not sure if the goal would be to hold this until mid-January or something. It might be, in which case they would just chop here for a bit. But part of me thinks that once it's ready to go, it should just go. And I still think we spend more time at the top than the bottom. But whatever. Let me do the measurement from here to the top through the middle. See, that's too soon. That's like today. It's running up today. I'm just kidding. That's too soon though. But it is like today. I wonder if we use like the other bottom instead, if it would be better. I think this is pretty darn good. Like, I'm not gonna... I mean, we've done this kind of stuff before with the waves, but it looks really good. But yeah, in terms of rotation, there's not much time left. If we used a... that triangulation is really solid. Really, really, really solid, guys. Like, that is super tight. Right there on the 16th of January. That is really, really good. They don't come much better than that. So that's the upward wave trajectory. That's the, gosh, it's a channel line, and it's the gap fill. And it's arguably really close to that creek. I'm willing to bet, and I'm not going to say this is the best place to put it, but I would wonder if you took this down to either this line or this line, if it would match more like the breakdown. That one looks too low, but I wonder if it would match like pretty much perfectly. So yeah, it sort of circumnavigates it. So the top two go right on over top. I wonder if the top and the bottom. I wonder if this one, the first push instead of the second. That would be the high before it made an up thrust. I wonder if that's significantly closer. It is. It is closer. So there is a really tight concentration right there. So timing is interesting. Man, if I swear, if I miss this, I've still got some January ones. I tried to roll some of them, but it got too expensive to roll. I'm going to end up missing it by like a day. I'm going to be so upset if like all that stuff expires and then they run it up. I'm going to be like furious. That's probably what's going to happen. So why don't you just roll them over? I mean, I might have to, but I'm going to be mad because I've been looking at this chart for months. Uh-oh, Booksy gonna flip tables. It would just be really frustrating. Yeah, so $20 today. That's what I was saying. I don't know how you can't really... I don't know how you could expect something like that. I mean, technically, the wave itself is... I mean, it is there. It just doesn't make any sense. You would expect it to go there like now. You see the distance traveled here? That's correct. So that we know that wave is accurate because, again, pulling from where it was, coming off the bottom to that breakdown. I mean, that's crazy, but it is right. Maybe Monday. Merry Christmas, right? I don't know. I don't know what I would do if it was Monday. I wouldn't be able to stream it. If I do, it'll be crappy audio with crappy internet. I'm going to be somewhere where there's not good internet. And the audio is not great when I don't have my stuff, so... I don't really want to stream, over the holiday either. I want to focus on my family and... It's entirely possible that almost all of this happens while I'm not able, or I'm not streaming. So you guys just be aware of that. Like, I know that yeah, it's like today. like really like yesterday and today. I mean, we could probably move these lines around a bit. One thing I was thinking is this one right now is currently like kind of defining that top, and it does work. I don't want to move it because if that's the triangulation, that's the triangulation, you know. If I move this out, then this has to shift and that shifts up, and then it's broken. But it looks correct to me. Like that looks right. There's the middle. Right off that LPS drop here at 689, 685 or something like that. It's right at that little tiny gap down. Right there. What's up, dude?
You done?
No. But I'll be done in a minute. I'm gonna just get lunch. Yeah, I think that you probably could make an argument either way. If for rotational symmetry purposes, now would be the time to make the move. But if there's a desire to kind of do like a one and done sort of similar motion here, then it doesn't really make sense to do it until like right on the 15th, 16th. Which makes me think that, yeah, if you had options, you'd be seriously out of luck. Yeah, it's the same. It's the same as I just gotta roll. I gotta roll. I hate that though. It costs a lot. But it's safe. I mean, there's nothing. If you think it's gonna happen, there's really no reason to. If it doesn't go like Monday, then there's no reason to think that it won't build out here and then go like right after they expire on like the 17th. Because it's the same distance. That should be enough. I mean, frankly, for me, like that's almost enough reason to think this is going to happen. The fact that you guys are like, that's not a good reason. No, really, like the fact that this move right here is identical from the creek is a big deal. It makes me think it's going to run off 485 or 480, you know, and go right up to that target like it did last time. Just some massive pump. I really hope it's not like that. I hope we get a big move. I don't know, I got a bad feeling about it. Yeah, I got a bad feeling they're going to screw over people who have options on the 17th. I'm just telling you. I'm just being honest. Because that is really tight. And it's equivalent. And so the time from now until then is the same. Like we were just saying, it's the same distance here to here as it from now to then. So if you took that and you just built out something really similar on AMC right now, it would take roughly the exact same amount of time to develop this bottom here and then break out. And it's the same distance. So yeah, so you pretty much have like an SOS with a backup like this. You think they run it up first and then drop it? You could be right about that, but it looks like it terminates on the 16th. That's unusual. Yeah, I guess both would be fine. But I would have trouble, if they wanted to run it, I'd have trouble understanding why they would do it before. Man, this stinks. This almost looks too perfect to ignore. The wave is what's really bothering me. The creek cross. We don't have time to worry about every little thing. You can worry about anything you want to worry about in life. There's going to be problems. But here we can focus on just a few things and then Everything else is going to fall into place where it does, when it does. This looks pretty convincing to me. Yeah, I'm kind of bummed about it because like I'm talking about myself because I'm just thinking about how my options would get screwed over if they don't run it until the 17th or even right after on the 18th. Which is kind of what happened here. It took like, I mean, this I guess did run up. I don't know when option expiry was in May. They ran it on the 10th into the 13th. Would options expiry have been on like the 15th or the 16th of May? What never happens. This happened to me before though. I remember in 2022, I saw the setup right before it went. And I didn't have enough cash on hand, and I had to like flip some stuff around in order to get some of my options that I got because I was like really convinced that it was going to go, and I ended up having to like get rid of certain positions in order to get others. It was just the nature of the beast. So, what doesn't happen, Reese? I'm sorry, I was looking around. Because in like 2021, they ran it up after mid-January. It was like it took that time to work out, and then it ran up. This looks like they're going to run it for sure, but it doesn't look like there's a strong enough case here that you would suggest that it chops for a couple weeks, and then right around the 15th or whatever, they start moving it up. Boom, pop. It's hard for me to ignore that setup. Oh, he's never bullish. Oh, I see what you're saying. I hate to say it, Skull, but you might want to think about, you got to decide what is right for you, but I'm definitely thinking about what I want to do with them because I've had mine for a really long time. Like, I thought I was giving myself enough padding with 6 months out or 7 months out. Maybe we should have been looking at way longer, but the truth is rarely simple, you know. It's usually a little bit messy. If the desire was to drive the price, I really don't want to cash in on some of these positions, but I might just do it to get the extra cash. Because rolling it out even a month could be the difference between like a huge win and a huge like slap in the face. So it'd be expensive. I might do that this afternoon. I'm gonna be peacing out anyways, so well, it's a personal decision. You guys have to decide what you want to decide. Leaps in the money. I agree. That's a smart way to do it. And I had some, but at the same time, it's like the way that I had built out my positions, there was only a few like risk on plays, but they were expensive when I got them like months and months and months and months and months and months and months ago. And they were leaps, but they were kind of expensive. And I think in retrospect, obviously getting out of those sooner and then swapping them out, that's always been in the back of my mind for like the last 3 months, because when they dropped it down here, IV's been hiking up, but there was a period in here where I was like, that was really the best time to get some things. I got some in the money contracts that I got out of because they were short term when we pushed up here, and that was a win, but I did not I never swapped out my other ones, and I should have. Woulda, shoulda, coulda. Because looking at this setup, it just seems pretty plain to me that they might be doing this in order to kind of get people, I don't know, to eat up those premiums. Like they're selling those, and then they're going to eat them all up. You know what I mean? And then actually go there. I don't know why they would do that exactly. Leaps back then are not in the money now. Well, that's true. Way back here. We were here for a long time at 5. So there was a lot of trading decisions that I made back then that, again, like I feel like I could have probably I had plenty of time to adjust them. Distant elephant is what they call it. You think it's not a big deal, and then all of a sudden it's in your face, and it didn't really change in my favor. So it is what it is. Even if I cash out some of these positions, I won't be able to do anything till Monday. But I'll have to do it today if I want to do anything Monday. So I don't know. I got a lot of shares in a lot of these stocks that I think are going to have a squeeze. The share positions are good. This GME call is kind of messed up. But it's much the same. It'll expire, I think, too soon. Why were people buying the January ones? That just doesn't make sense to me. If you think it's going to run up, why buy like the day of? That's just a really risky. It just seems really risky to me. Like, why not go a month out or something, you know? Yeah, I mean, there's not much I can do. I'd have to, yeah, I mean, maybe it's going to be a mess. Some of them are okay. Some of them are just not going to work out. Oh, well. What really annoys me is some of the strikes don't even exist. Like, you can't get them as high. So the ones that I do have, you can't get the same strike. So then it becomes a question of like, what do you want to do? It's like, I don't know. Go as far out as you can, I guess. What a bummer. I hate that feeling. So close yet so far. I guess that's life. All right. I'm done. I'm going to head out. We'll figure it out. That's true. Zany, you might be right. Even if they did, I think this particular right here it will run a bit. Yeah. So even if it pumps up to like 580 or 6, you're gonna see it. This is kind of different than the other one. So like I do have 2 different models, right? The other one was about building out really quickly and then just kind of running through those levels, not stopping. So there's definitely a possibility. There's really no way to know for sure. Let's just say that. There's no way to know for sure exactly how long you're going to spend at each level stopping. The rotation, which largely is just a simplified way of understanding or maybe a complementary way of understanding the channel, which is this chart. This doesn't really tell you that it has to do this. It's just more about like the symmetry of it and the fact that there's a distance that's currently being built around 480. That's the same distance traveled, implying that you'd have a very similar move and you're in a similar range on this channel. But we also looked at the other one we looked at was the 50-50 chart, right? And that was very different as well. So that one does not have, and I don't know where it is, probably this one. I probably turned it off earlier. That one doesn't have a lot of stops at all. And the concept there is that you're just kind of ramping. The earlier ones would be slower, but they wouldn't actually be major stops. And that has happened, many times. So I think it's just a question of like when, not if at this point. I'm kind of surprised at how bullish I am right now. I'm really, really bullish going into January. And we'll see, like these trajectories are super, super high. So this is like December 30th or 27th. This would imply that you're already running and you're already at like $8. You're like halfway there. And that's the one that, again, it's like built out like the trajectories were on that one, I believe. So, yeah. So that's one that I think is very possible as well. We won't know, till about mid next week. But anyways, appreciate you guys. I hope you have a Merry Christmas, Happy Holiday, whatever you do celebrate. I hope you're with family and friends and that you are blessed by a good, week, relaxation. I know the market's there, but do what you want to do. But I guess enjoy the time you have with the people that you have. So those are the people that are there, and this is all a bunch of fun. Hopefully we do make money. I want to come back and have positive things to say. But for now, just enjoy it. And I will be back on maybe the second or third. I know it's a long ways off. You're probably like, why not do anything else? If I do a special stream, it's a big if, it would have to be like when I have some serious downtime, like if somebody's like my parents are napping or something, and my family's doing something else. Maybe. I don't want to do it. I'll tell you that right now. But if there's something extreme going on and either I have some downtime, I might do a special stream next week, but I wouldn't count on it. And I'm very doubtful that I would do that until after the 25th, regardless. So do not count on me doing it. But I will be back in the saddle by the second or third after New Year's. There's just a lot going on between now and then. So I don't expect to do it. So anyways, best of luck in the market. Hope you guys have a great afternoon and great holiday. And we'll talk to you soon. Thank you.